Cash equity trading. I'm Tom McKenzie in London, and here are the top stories. Debt ceiling talks between President Biden and House Speaker McCarthy end with optimism, but still no deal. US futures point higher, though Europe is in the red. The Fed's James Bullard and Neil Kashkari say more hikes could be needed this year. That's just days after Jerome Powell signaled a pause next month. Plus, the Qatar Economic Forum kicks off in Doha, where we will be speaking, of course, exclusively with global leaders and business and government. Let's check in on these futures then as we weigh up the mood music. Positive again out of DC on the debt ceiling, but again, no concrete deal. McCarthy says there does need to be a deal done by the end of this week. Futures pointing lower here in Europe by 0.2%. We're waiting for PMI data, services and manufacturing out of France and Germany to round out and flesh out the picture in terms of the resilience of this European economy, with a particular focus on services. The FTSE 100 currently off just by 4 points or so, just in the first few seconds. The Spanish IBEX also pointing lower as well. The FTSE 100 now down 0.1%. We have a bit of news in terms of on the corporate front in the banking sector, which will break down for you across this hour. Of course, we look ahead to the conversations out of Doha at the Qatari Economic Forum. The FTSE 100 currently down 12 points. Let's move it on, see how things are playing out across these sectors then, and the asset classes. Given what we've seen in terms of the run-up in yields, particularly at the front end, just after 30 days, in that period, you've seen yields up at the front end, the 2-year, by about 40 basis points. But despite that, the NASDAQ has rallied. In 10 sessions, the NASDAQ posting gains of about 5%. Can that continue in this high yield environment? 435 now on the 2-year. The NASDAQ futures pointing to further gains of about 0.1%. When it comes to the S&P, many have flagged the risks around the narrowness of the upside that you've seen there. Hasn't been able to break through 4,200. In fact, a survey of strategists by Bloomberg suggests that the S&P is going to end the year 5% lower from where it is now. Euro dollar 108, gold under a bit of pressure, down 0.5% again on that relative optimism around the debt ceiling. Its lowest point since early April for the yellow metal, 1,961. We'll see if that holds and how tied that is to the conversations coming out of DC. Speaking of which, US President Joe Biden is optimistic that a deal can be struck to avert a default on US debt. Biden held another round of talks with House Speaker Kevin McCarthy on Monday. Although the two sides remain far apart, McCarthy said the tone of negotiations have improved.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion. We're going to have the staffs continue to get back together and work on some of the things that we had talked about.
Okay, let's get more on this then, and the details from Bloomberg's Bruce Einhorn. Bruce, where does this then leave negotiations?
Well, Tom, they're ongoing. So we just heard Speaker McCarthy. He struck an optimistic tone. He said that he would continue having discussions with President Biden on a daily basis until a deal is reached. The big question is how quickly can they bridge the gap, because there are some key differences between the two sides. Republicans, for instance, want to see caps on spending. They don't want that to apply to military spending, however. That's something that the Democrats want to see. They're saying if there's going to be a cap on spending, it has to be across the board. Military shouldn't be exempted from it. President Biden also talked about the need to look at the revenue side. He wants there to be attention to closing tax loopholes. Say that's something that Speaker McCarthy has said is a non-starter for the Republicans. So there's still quite a lot of daylight between the two sides. They don't have a huge amount of time left. Janet Yellen has said that she expects that the Treasury will run out of money sometime in early June. It could be as early as June 1st. Another thing to factor in is that according to House rules, there needs to be 72 hours for members to consider legislation. So that's something that Kevin McCarthy has said he would not waive. So that shortens the time frame that they actually have to reach a deal.
Yeah, that's a new element, certainly to me, an extra potentially 3 days for the House to scrutinise any deal. So you've got to get the deal, it's got to be scrutinised, and then, of course, it has to be passed by Congress. What happens, and you mentioned the fact that the Treasury Secretary came out again and updated in terms of the time frame on essentially running dry on cash by early June. What actually happens if the US Treasury runs out of money?
It's a very good question, right? We don't know. It's never happened before. The assumption among many people has been that Treasury Department would make a priority out of paying principal and interest on U.S. Treasuries. However, we've never been in this situation before, so it's unclear whether that would really be something that could happen. Also, politically, it might be difficult because what about something like Social Security? Shouldn't that be a priority as well? So Janet Yellen has been very clear about not giving any indication of what Treasury would do in this situation. Her line consistently has been, we can't be in this situation. The U.S. needs to figure out a way to extend the debt ceiling, lift the debt ceiling so that we don't have to then get into all the different scenarios here.
Okay, Bloomberg's Bruce Einhorn on the latest in terms of the meeting that took place, of course, between the President and McCarthy and the next steps for this pretty tortured process. Thank you. Now let's get back, of course, to the analysis across these markets. The debt ceiling story, of course, still a key factor, no doubt one of the key themes as well at this year's Qatar Economic Forum, and we'll be dipping into that when that event starts. It's kicking off today, this morning, just in the next few minutes. Joining me now, though, is Valentin Ainuz, Deputy Head of Developed Markets Research at Amundi Institute. Valentin, thank you for joining us this morning.
Hello.
What do you put down to the relative resilience then? How do you explain the relative resilience within these equity markets to this debt ceiling standoff?
The market today is buying the story that it will be a short story, that at some point they will reach an agreement and the US economy won't default. But I expect the market's attentions to return to the economic outlook and to the Fed. Next inflation report, next job report before Fed's June meeting are really, really key. And the inflation, my take is that the inflation remains a top concern. So equity market and also debt market are really, really optimistic today versus all this risk.
And you make the point that in your view, the markets are not pricing in a recession, that the Fed is going to have to go higher for longer, that it's going to have to crush growth, at least to an extent where you get a recession. What does that market pricing look like? What do you expect to happen when markets finally wake up to that risk as you characterize it?
Yeah, we expect more stress on the corporate debt market and then more stress on the equity market. Inflation today is a top concern. We have a decline in headline inflation, but core inflation remains sticky. And the market clearly underestimates the tightening in monetary policy needed to bring inflation back to 2%. So today, U.S. economy remains resilient because of the consumer, but it's only because of some temporary factors.
Valentin, I'm just going to jump in briefly because we have the opening address. We'll come back to you. Thank you for your patience. We are going to cross over now to Doha. We have the opening address of the Qatari Economic Forum, of course, in partnership with Bloomberg. And you can see the Qatari Prime Minister now, Sheikh Mohammed bin Abdul Rahman bin Yassim Al Thani, now taking to the stage, and we'll be getting opening remarks. We've got a number, of course, of very high-profile guests, leaders, global leaders, business leaders at this event that starts in earnest now in Doha. We'll be covering that for you, bringing you, of course, those exclusive interviews and conversations over the next few days. And again, this is the Prime Minister of Qatar. undertaking, of course, the first speech, the opening remarks, of course, as this event gets underway in Doha. Valentine, let's bring you back in at this point. Your views then on the Fed. The inflation problem remains a key concern for you. Is this a concern? Because we speak to the likes of Paul Donovan over at UBS. He says that he sees now signs of disinflation in some parts of the US economy. Is this a concern for you that possibly you can get a snapback in terms of these price pressures in the months ahead? Or is it just the fact that getting inflation back down to target is going to be a much tougher grind?
But if you are looking at inflation today, core inflation remains sticky. The US labor market, even if it's cooling, it's still very tight, and rise in wages is not in line with a 2% inflation target, and the US labor market is short of 2 million people. This is the same story on the US residential market. Fundamentals are very, very good. Of course, the price on the US residential market are expensive, but US households are solid, they still have cash, and the level of inventory is very low. So we are today in an environment where the demand remains solid and where we still have some constraints on the supply, on the labor market and in the US residential market. This means that we will need to have a contraction in economic activity to bring inflation back to 2%. So far, the tightening in monetary policy is not enough. And this risk is completely underestimated by risky assets.
Okay, completely underestimated. So they go again. Is that your view? They go again, the Fed, in June. We know that debate is live. We've heard from Jay Powell suggesting that maybe there's a pause. Do they go again, or do they come through with a hawkish pause?
So yeah, if we have a pause, it will be a hawkish pause, and the door remains. Further rate hikes are not off the table. But what we expect in Amundi is that we expect no rate cut in 2023. The Fed will maintain rates in restrictive territory for a longer, much longer period than what is priced today by the market.
Okay, the markets are not pricing in the recession that will unfold in the second half. The Fed will hold for higher to get inflation back down to its 2% target. Very clear from Valentine Aynoz on the risks around these markets to underpricing the recession that could be forthcoming. Deputy Head of Developed Markets Research at Amundi Institute, thank you very much indeed for joining us this Tuesday morning. Coming up, we are, of course, as I mentioned, live at the Qatar Economic Forum in Doha. Do not miss our exclusive interview with the chairwoman of global public relations and consulting firm Teneo. Ursula Burns joins us next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back now. The Qatar Economic Forum has kicked off in Doha. The event brings together government and business leaders from around the world to discuss the latest trends in finance, climate, healthcare and technology. Let's head over then to Doha, where Bloomberg's Caroline Hyde is standing by with a very special guest. Caroline, good morning.
Tom, thank you so much. Yeah, joining me now, Ursula Burns, Chair of Teneo Holdings, of course, founding partner of Integrum, an investment company that's thinking about fintech, about the application of technology. Of course, many will also know you as the first African-American woman to helm a Fortune 500 business. It's great to be together again.
I really love sitting with you, so it's good to be together as well.
Ursula, what are the CEOs, the leaders, and you as a chair and a leader thinking about from the macro perspective? List the worries, because we're thinking debt ceiling, inflation, war. Are these the three anxieties?
Debt ceiling, war for sure. Inflation a little bit, but in the background more than in the foreground. Technology and the change that technology will have, positive and negative, on the way that businesses operate, on everything. A risk, big deal now. This global risk, overall, how do businesses navigate? How do they protect the downside, take an opportunity of the upside? Talent, still a big issue as well. There are very few things, because it's all happening at once, there are very few things that people are not focused on today, which is an interesting challenge. Before there are 2 or 3 things, right? It used to be China, Russia. Now it's China, Russia, your talent, technology, it's government, geopolitics. Everything is hitting all at once right now, and it is universal. All my boards, Teneo, all of their client sets are thinking about this massive amount of downside risk, but also opportunity. How do we take advantage of these things?
Okay, let's talk about taking advantage of a debt ceiling debacle. Is there any way you can take advantage of that?
There's not really a lot. There are some things that are totally negative.
Okay.
The debt ceiling debate, distractionary, actually really risky to momentum and to investment, to everything that companies, individuals as well, think about. That's how do you plan for your future? My hope is, like the other 4 times that we were in this situation in my lifetime, that we actually stop playing games. If we are doing that, I'm not saying that we are, but I do believe that there's a solution in here, and the longer we take to get to it, the worse it's going to be, so we should get there quickly. Government officials, we have enough to worry about. We don't need to kind of manufacture other types of problems, and I would hope that we don't do that.
You've often spoken out about the inability of people to listen to each other's perspectives. Are we getting to any sort of crescendo in that at the moment? I'm not just talking about the US, but in this de-globalized world, are we hearing one another?
I don't think so. I think, one of the biggest problems, Caroline, I think about is that we spend a lot of time arguing about the argument. We're just arguing. It doesn't matter what's in the middle, what the subject is. It's just that there's one side and the other, and we like the fact that there's one side and the other, and we're going to argue. If you look at climate change, if you look at the impact of China on the global economies, let's do specifically the U.S., if you look at the war, if you look at the challenge that we have with technologies and talent, we should be thinking about ways to settle, not dampen, but to settle these arguments with constructive questions that we can work on for the better good, for the global good. That's not what happens here. We spend our time debating whether or not the issue, whether the person on the other side is worthy of anything, which is not really that relevant to the topic that we're talking about. That's one. But also about the fact of whether that's really a problem or not. Is that, what's really the facts? When I was growing up, that was not the type of debate we were having. Thank goodness. Now I think we've regressed pretty significantly. I do believe that there is a chance for us to move out of this. And I think that the reason why is because so many things have the potential of being great. So many things also have the potential of being horrible, that where people are hopefully starting to think about the fact that the horrible is not where we want to go. If there's a chance that we can get to great, think about AI.
Yeah,
if we can grab AI, everybody's nervous about it. We should be.
Should we be regulating it?
We should be, absolutely. Now, here's the problem. When I say we should be regulating it, government thinks about regulation as control, as totally predicting the future, of making it foolproof. That's not what regulation should be about or is about. This is a technology that is developing, right? It's developing. We know that if we just leave it to everyone who we generally leave it to, there'll be a huge amount of have-nots and a small amount of haves.
Yeah.
And particularly now, since what the use is can be helpful medical technologies in climate change and education, in peace, that this is a place that we should have a community working together, technical community, government communities, education, NGOs, on this unbelievable gift, right, that we have, and trying to figure out a way to make it better, good for all, better for all. And I think that there's a chance for us to do that. And I think that AI may be the place that we start to have that discussion more constructively. Particularly as when you think about medical advances that you can make and educational advances, everybody talks about the downside of students cheating.
Yeah.
I mean, if this is the biggest thing we have to worry about, then think about the upside of having large data pools about disease, about treatments. And so therefore, how could you actually live a better life? How could we have less negative impact on the globe?
Yeah.
We have enough information, we just don't have it in the right forms, and we don't have the brains quite yet read enough to do it all. Imagine if we could actually start pointing our efforts towards this good, not towards the, oh my God, we're going to blow up the world, or...
You've got the money to allocate towards the great. How are you thinking about that? How is it upending the business opportunities you see with Integra?
Yeah, most people think about this as a way to save money, right? So how do you improve profitability? The way that we think about it in Integram and our portfolio companies, the way that we think about it in Teneo when we advise CEOs and business leaders, is to think about it from a growth perspective.
Yeah.
What markets, what opportunities that exist today that we couldn't attack before? In all of the portfolio companies that we work with, generally insurance, risk-based companies, insurance, payments, infrastructure, think about how predictive AI can help you to quantify and therefore outrun risks, or at least mitigate them significantly, and therefore create more opportunities to invest in the upside, and instead of investing to protect against the downside, right? And that's what most business leaders do. We really do know how to manage downside pretty well, but investing for the upside is a very big difficulty for us, because who the hell knows, tax policy. So I think that there's a lot of opportunity here, particularly if we stop looking at our navels, right, and just look up towards the future. It's not easy. I know I'm not, I sound like, oh my God, all we have to do is be positive, but I know we can't be as negative as we are. That's not going to be helpful.
We're here for positive.
Yeah.
Ursula Burns, thank you so much. I could always speak to her for another at least 10 or 15 minutes. Ursula Burns, of course, the chair of Teneo, founding partner of Integram Holdings, plus many other hats, Tom.
All right, great stuff. Caroline Hyde, of course, on the ground for us at the Qatar Economic Forum. Thank you. Let's cross over now to live pictures of our very own Jennifer Dabasaja with, we believe, there he is, the Rwandan president, Mr. Paul Kagame there, on stage at the Qatar Economic Forum in Doha. A man has been in charge for about 2 decades, yes, 2 decades, of Rwanda, has, of course, driven growth in that country, but also been accused, of course, of curtailing media rights and, of course, of human rights abuses as well. There he is on stage at the Qatar Economic Forum. You can watch more of that interview at LiveGo on your Bloomberg terminal. A lot more still to come from our coverage of the Qatar Economic Forum. Bloomberg's Manus Cranney will be speaking to the CEO of Qatar Airways. That's at 9:15 a.m. London time. These are just some of the government officials who are speaking throughout the conference. Bloomberg anchor Francine Lacko, of course, will shortly be hosting a panel on the new energy paradigm with key Middle East figures, including the Saudi energy minister, and Bloomberg's editor-in-chief, John Micklethwaite, will speak to Hungary's Prime Minister Viktor Orban later this morning. This is Bloomberg.
watching and says, I want to be Ari Emanuel when I grow up, what should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
From London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story. Is there the kind of upside?
Welcome back to the Open. We are 25 minutes into the European trading day. Losses across the benchmark of 0.2%. European stocks. S&P E-minis over in the States flat currently. The Nasdaq as well. Just edging into the green, just holding on to that upside. 5% gains just in the last 10 sessions, despite yields higher over on the Nasdaq. Currently, the losses are coming through for European equities, and the data in terms of services out of France coming in below forecast. A couple of individual names to bring to your attention. Vivendi is in focus for us today. The line crossing that the largest shareholder, Mr. Bolloré, Vincent Bolloré, has sold shares in that business. So the stock dropping, as you can see, 8.5%. Julius Baer, bit of a tumble there, more than 7%, almost 8%. They came out with, and they posted, in fact, and highlighted accelerated inflows in the first 4 months. They do expect to add to headcount, but they described the new money, the net new money of 3.5 billion Swiss francs by the end of April as somewhat of a slow start. Gross margins also a bit of a slight drop and higher costs. BT, slightly different picture there, gaining 0.2%. The French billionaire Patrick Dahy increasing his stake in the business via his investment vehicle Altice to 24.5% from 18%. Coming up, we're going to get back to the Qatar Economic Forum with Francine Lacroix. Stay with us. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different, Digital Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
Welcome to Balance of Power. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Debt ceiling talks between President Biden and House Speaker McCarthy end with optimism, but still no deal. The Fed's James Bullard and Neil Kashkari say more hikes could be needed this year. That's days after Jerome Powell signaled a pause next month. Plus, the Qatar Economic Forum kicks off in Doha. We're going to be speaking exclusively with global leaders and business and government. The markets, European markets, are down just a little over 0.2%. The economic data coming through, this time from Germany. May services PMI for Germany beating the forecasts. It's a strong number. It's a solid number, 57.8. And we know that investors are zeroing in on the services data number. Forecasts were for 55, so a strong beat in terms of services PMI for the month of May for Germany. Manufacturing PMI coming in softer than the forecast by some margin, 42.9, so significantly below that line of 50 between expansion and contraction. The forecast was for 45 for manufacturing. So the manufacturing slump continues in Europe. Services, though, stronger, at least in Germany. The services number, by the way, out of France came in slightly below the forecast, but still in expansionary territory. And that divergence between manufacturing and services is certainly in focus. Across the benchmark, then, losses of 0.3% across European equities. The euro dollar, by the way, currently at 107, so just down below 108, down 0.2% on the back of that data. The DAX over in Germany just losing 30 points, and here in the UK, the FTSE 100 off by 12 points, down a little over 0.1%. Just two sectors in the green at this stage. Let's flip it over. Telecoms gaining 0.4%. Insurance also up about 0.2. Those are the only two sectors in the green as we weigh up, of course, traders repricing around June as a potential hike, about 30% chance of a hike in June. Slightly more hawkish comments coming through from James Bullard. He's not a voting member, but of course he was first out of the gates in terms of calling for hikes to address the inflation issues in the States. So we take on board those comments as well, and of course continue to watch the developments when it comes to the debt ceiling. No deal, but optimism in terms of the mood music. Now, a new revolution in AI is providing a powerful tailwind for the NASDAQ. The tech-heavy index climbed to its highest level in over a year yesterday, despite all these headwinds and potential challenges. The index's best-performing stock is AI darling NVIDIA. That stock has rallied just 113% year-to-date. Let's bring in markets reporter Valerie Teitel. Valerie, is there anything stopping this tech rally then?
It doesn't look like it for now. If you take this tech rally in the context of the fact it's happened with yields rising, it just makes it even more impressive. In the last 5 sessions, the NASDAQ has risen over 5%, and 2-year yields have risen 30 basis points. You can also add to that the dollar has strengthened nearly 2%. These are normally quite big headwinds for tech stocks, and it makes this rally even more impressive with all those macro backdrops going on, it's rising despite these two-year yields rising. It's all signs that this has an incredible amount of momentum. It's trading very well. I wouldn't want to be standing in the way of it for now. We have heard of many people calling this a mini AI bubble, but I would not be fading this at the moment given the strength in the rally.
Okay, really, really interesting. Of course, the S&P and the rally there, many have pointed to the narrowness of that rally and that being a potential concern. They want to see that broaden out, is the call from some strategists. But to your point on yields, they're up again this morning, marginally. And the 30-year, the long end, has also seen yields up. It's close to 4% now on the 30-year. What is the explanation there?
Yeah, it's very close to hitting year-to-date highs, that 30-year yield. And it's funny, the last time that the 30-year yield was this high, we were worried about the Fed having to hike to over 6%. That was back in February and March when the data came in just so strong for the U.S. economy. There's a few reasons why perhaps there is this pressure on the 30-year bond. We've had a lot of IG issuance lately that does pressure Treasury yields higher, and there perhaps is a positioning washout of longs. Now, it was a favorite trade to be long the 30-year bond as a way to position for the cycle when you're not necessarily exposed to the exact point in which the Fed is going to cut rates. But thirdly, and I'd like to add, it's tying this to the debt ceiling. We know that the Treasury is behind on issuing long bonds, and one risk that many people are talking about is as soon as this debt ceiling is wrapped up, we move very quickly to knowing that the Treasury has to rebuild its cash buffers, and a big part of that is going heavy into Treasury issuance, which could perhaps pressure these yields even higher.
Wow, we're looking at top and above 4% yields on the long end at the 30-year. Valerie Teitel, excellent on this tech rally and the persistence and resilience of that tech rally and what is happening, of course, at the long end of the Treasury curve. Let's get the Bloomberg Business Flash now, get you up to speed on some of the other corporate stories that we are watching. JP Morgan is set to gain an even bigger boost from rising interest rates thanks to its purchase of First Republic Bank. JP Morgan has raised its guidance for net interest income this year to $84 billion from $81 billion, but the lender also sees second quarter revenue from trading and investment banking to each slump 15% from a year ago. CEO Jamie Dimon also addressed the question of his retirement.
I can't do this forever. I know that. But my intensity is the same. I think when I don't have that kind of intensity, I should leave. I don't think CEOs should retire in place and just cut back and take it easy for a while. I think that erodes the whole company over time. I think that's a mistake. I think the management team has tons of intensity.
First Citizens has sued HSBC for allegedly raiding dozens of employees from Silicon Valley Bank as First Citizens was taking over the failed lender. The complaint filed in a California federal court accuses HSBC of poaching 42 bankers and misusing SVB's confidential, proprietary and trade secret information. HSBC's spokesman declined to comment on the lawsuit. Mizuho Financial Group is forging further into U.S. investment banking through a $550 million deal to buy Green Hill. The Japanese banking giant will pay $15 a share in an all-cash transaction. Shares of Green Hill climbed 116% at the close of the U.S. Monday trading session. Mizuho plans to complete the transaction by the end of the year. That is your Bloomberg Business Flash. Let's get back out then to the Qatar Economic Forum in Doha, where Bloomberg's Francine Lacqua is speaking to Saudi Arabia's energy minister, Qatar's energy minister, and Iraq's oil minister on a panel. Let's take a listen.
And I intend to compete with the Saudis and both men and women who came to the World Cup and brought joy and passion and demonstrate that joy and passion and love for this country and its people. So where I am or what I am here for is that and that precisely. The other things are details.
Details that change, of course, the energy complex for everyone.
Yeah, but we are relaxed people. We take things in a different latitude. We are focused on the bigger picture. Yes, the nuances of the day and tomorrow and after tomorrow are crucial, but we deal with them tactically. We in Saudi Arabia do have a vision. It's called 2030. This is our main drive. Everything revolve around it. So whatever, if people sometimes ask what they intend to do here and there, all what I need to tell them, just go back and read what we have put together in that vision, and you will find all of your answers. Now, in today's environment, my colleagues here will tell you that we are dealing with such a volatile situations. Almost all of them have been generated and created for nothing that we have had anything to do with. However, realistically, we have to handle it and deal with it in an amicable way, again, but not losing sight of our future trajectory. It is unfortunate that we have to be vigilant, we have to be proactive, as we have in OPEC Plus have been saying for quite some time. I think the three objectives that people need to continue to remember is being proactive, preemptive, and the new word that we have injected in our language is we have to also be hedger of what may come. Not necessarily that we are issuing a judgment about it, but the message I would like to bring here is that the whole world needs not to forget that we have a future, and we should be brave enough, courageous enough to attend to that future without continuing the so-called kicking the can policies, those policies that may allow us to fend the situation for this month, next month, or even the month after. But with that, we're losing sight of our intentions and our more extreme important objectives.
Thank you, Minister. Minister Abdel Ghani, when you look at the trajectory that we could see in terms of supply and demand for oil over the next 12 months, how do you see it going? Are you concerned that there's not enough demand from places in the world?
بسم الله الرحمن الرحيم. أنا سعيد أن أكون في هذا
In the name of God, the merciful, the compassionate, I'm so glad to be with you in the economic forum. This is my first participation in this forum. As far as your question is concerned, and as far as the latest agreement of the OPEC and OPEC Plus, we, the representatives of Iraq, we are committed to put into place the results and the outcomes of the last meeting. We are committed to reducing, the oil supplies, but without affecting the world economy. As you may be aware, Iraq, despite all the economic problems that we have been through, but we have been always committed to abide by the outcomes and by the results of the OPEC meetings. And we have always endeavored to keep the stability in order to help the growth of the global economy. Realistically, the first agreement that we have embraced and that started in December 2022. We were committed to what we said. We are committed to reducing, the production. I'm talking about the Iraqi supplies. And at the same time, we are also committed to the latest agreement. OPEC, this pertains to the latest agreement of the OPEC Plus, and there is a commitment from all the participants, and thanks God, we have been able to keep the stability. We didn't affect the world market adversely, if I might say so. And at the same time, of course, the supplies are good. And we can see that there is a stability. We are committed, as I said, to to the latest agreements, and there is no scarcity in the supplies.
Thank you so much, Minister.
شكرا جزيلا.
Future. Minister, of course, your focus is on gas. Can you tell us whether you're on track to increase production of LNG by 60% by 2027, and whether you can also surpass that, given the need for gas in the world?
First, I'd like to thank you for inviting me to this panel, and I'm honored to have His Highness and all the guest leaders attend our panel. Regarding the gas development and the future, we see as a big picture, you were asking about supply demand. We think that there is going to be a big shortage in gas in the future, predominantly due to the energy transition push that is, we would say, really very aggressive without studying it properly. Because if you look at economic stability and environmental responsibility, they're not mutually exclusive. You have to have both. And when you push some countries to doing that, and you ruin their economy, I think that doesn't help humanity in general. If you look at the future, whether it's gas or oil, there's going to be a shortage due to the decade-long lack of investment, whether it's in oil or gas, due to this push for the transition. I'm thrilled, actually, that finally the G7 in their final communique have said that we need more LNG to be supplied to the world. We've been saying this for the last 10 years, and we're actually implementing what you just mentioned. We're producing 77 million tons per day tons per annum of LNG today. We are going to go to 126 million tons in Qatar, and it's on track. All the contracts have been awarded to start in 26. In addition to that, we have about 18 million tons that will be coming from our project in the US, Golden Pass Terminal. So we're adding 65 million tons to the world's needs. When people were saying we didn't need it, I'm happy the G7 now agree that we need even more.
So would you also be prepared, would you be able to put more production if the world needs it? Because this is something that, as you say, the G7 said for the first time.
Yes. We don't follow what people say we should do. We do what technically is possible for our fields, but we always will have a track. We will have a plan to look at what we can do in the future, and when it's the right time and technically we can do it, we'll definitely do more.
Your Highness, how do you see supply and demand changing in the next 2 years?
Just as a follow-up with Saad, unfortunately, I'm known for being quite a cynical, sometimes sarcastic person. So it's not all about switching the valve, turning the valve, turning the pipe. These things takes a lot of time and a lot of investment. And for investors to do what is needed, they need certainty. We have a huge certainty gap. That's the real picture. Again, I have to emphasize, people are too much driven by the policies of the month and 2 and 3. Somehow, I'm not in the horses business, but in the UK and elsewhere, they have what they call them blinkers or blinders. Now, those two things, they used to put them on the sides of the two horses. Now we have a policy blinkers, and they are putting it in the front of the policymaker, which is make sure that whatever you do can get you on a day-to-day basis or a month-to-month basis or a maybe 6 months basis. People are really not daring enough to see the bigger picture and the longer-term picture. If they gaze to that picture with all these convoluting things that are happening in the form of transitioning, in the form of actual existent elements of uncertainty driven by the fact there is no clarity on what would be the policies of the future, it actually make it very apprehensive for an investor to invest. And even from the producer side, be it whatever it is, including, by the way, hydrogen. People talk about hydrogen as the fuel of the future. I ask you, who is going to be the off-taker? And where is the price for hydrogen today? We go around, Saad, you go around talking about blue, green, purple, pink hydrogen. But in the final analysis, who is going to be the off-taker? What would be the price of hydrogen? We're not talking oil. We're not talking gas. We're talking about the so-called cleanest of cleanest future, fuel of the future. And yet, you don't have the off-takers because, again, there are no clear policies for the off-taker to say, I have been given an incentive package that would enable me to buy that hydrogen, even green hydrogen, for that price for producers to produce it. If this is happening to hydrogen, and what we saw in Europe in terms of power last autumn, rescued by a gift of God that the winter was not as cold as was projected. How on earth one can envisage an energy future with all this uncertainty and, more important, with all these big questions that are not being answered?
But, Your Highness, I understand your frustration about the short term, and I understand that you maybe don't want to talk about what OPEC will do next, but we're in such a difficult economic environment, and you really have a front row seat in understanding what kind of economy we'll be left with. Why have we seen prices where they are?
Well, I'm glad that you brought that question, but I would have to backpedal if you allow me. Now, we were, as OPEC Plus, blamed in October, blamed in April. Who has the right numbers? Who gauged the situation in a much more, I would say, responsible way, but a tentative way? And what was our endeavor? Were we are price gougers or market stabilizers? I think over the last 6-7 months, we've proven to be a responsible regulatory institution. Had we had not had that, look at what happened to the other sources of energy in 22. What we need to do in the future, continue delivering in our authority. Because if you check what happened with all these so-called projections and forecasters, and I hope you can just give me a few seconds, look who did the most in trying to bring forecasts and data and projections that really created most of the volatility that we've had in 22 and continue to do so. I mean, there is an organization called the IEA. I think they have, proven that it really takes a special talent to be consistently wrong, and that's exactly what they have done. Who put together that Russia production will decline 3 million? What happened? None of that happened. Policies were made in the form of SPR draws as a result of that. Where was the use for it? Look at where we are now. Energy security is being shackled. We're running out of capacities because countries are not investing both in oil and gas. We have a very funny trajectory of where demand would be. So if you are a hedger, as we are, we will have to take action to preempt any possibility of further volatility. And that's the challenge that but we are forthrightly accepting the challenge, and we will continue attending to the challenge.
Talking about volatility, I want to ask you about short sellers, but we'll come to that in a second. Minister, how do you explain the price of oil down by 10%? Can you tell us whether you think Russia's compliant with some of their cuts, and what happens to prices going forward?
Regarding what?
Oil price.
يعني أنا حقيقة
Truly, I would like to seize the opportunity. I would like to seize this opportunity in order to focus on a very important topic and a very important issue, the issue of energy in Iraq. We, as representatives of the government of Iraq, we are committed to supply the international market with the necessary energy based on our resources. And one of the indicators and one of our most important mission is to increase investment in gas, in the gas energy. This is the most important challenge for the time being. And there are so many promising projects for the time being in Iraq in order to put into place our vision. And this begins with the investment in the gas energy. As I said, in Iraq, we have two different types of gas. But for the time being, we are investing in the gas energy and a highest percentage. And we are producing 40% of our gas resources for the time being. But there are so many other challenges. We are committed to put into place so many projects, as I said. And one of the projects, we have a partnership with the Shell company pertaining in the production of gas in Al-Basra, precisely. And there are two projects. We would like to increase the production of gas, reaching more than 400 million cubic meters. And the first phase of the project will be by the end of this month. And by the end of this year, we will put into place the second phase, as I said, of gas energy in different parts of Iraq. And this will help a lot. Added to that, we have signed an agreement with Total, the French company, and this pertains to the production of more than 600 million cubic meters of gas. And there are 5 oil fields that will be used within the next 5 years. All these projects that I have mentioned, and once again, I would like to seize the opportunity and my presence to say that we said that we are open to the international investment. This is, of course, the phase of the fifth phase of gas investment and oil investment is now open, and this pertains, of course, to the oil fields in Iraq and the one shared.
And that was Bloomberg's Francine Lacqua speaking to Saudi Arabia's energy minister, Qatar's energy minister, and Iraq's oil minister on a panel, of course, at the Qatar Economic Forum in Doha. You can watch the rest of that panel by typing live go on your Bloomberg terminal. The energy minister of Saudi Arabia saying that the IEA has been consistently wrong about oil forecasts and that the stock releases from the US was based on faulty forecasts. Plenty more coming up. That is it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Good morning and welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London. Here's what's coming up on today's program. Government and business leaders are gathering in Doha for the Qatar Economic Forum. The event focuses on the major economic issues facing the world. This hour, we're going to bring you exclusive interviews from the Qatar Airways Group CEO, the UK Business and Trade Secretary, plus Bloomberg's editor-in-chief moderates a special conversation with the Hungarian Prime Minister. Before we get to that, some breaking news on Euro area PMIs. It is weakness in the manufacturing sector. 44.6 is where it comes in. That is well below the forecast of 46. Services, that is ever so slightly stronger, 44.9. The forecast, 55.9. The estimate was 55.5. This continues to be the trend, one where we see weaker manufacturing. Services is the only thing holding up in this European economy. We're going to get more into those figures with our Bloomberg economy editor shortly. Before that, and as we look at any reaction in euro, does look slightly stronger off the back of that, though still down versus the dollar on the day. Some of the risk on posturing in markets has started to fade out as we continue to get through the European trading day. In the very, very early hours, we had a boost thanks to Kevin McCarthy, a House Speaker, saying that they were making progress and things looked good. That spurred a risk on rally. Now that's coming in. European stocks down 0.2%. NASDAQ futures, those are barely unchanged, but it has been a very strong year for NASDAQ. It's at the highest level, just about the highest level of the year so far. That's happening despite the fact we keep having yields creep higher. I was talking to Steen Jacobsen of CIO Saxo Bank earlier, who said that really tech is the only place, specifically the AI trade, where he wants to be. We've heard that from a lot of folks. There you go, the euro. I showed a pair some of its losses off the back of those stronger services readings, and manufacturing a little bit weaker. Now, when it comes to all of Europe, again, most regions are lower. You won't see it on the map, but we are looking at the smaller cap FTSE stocks, UK stocks. Those are in the green, but elsewhere, really throughout Europe, we are much lower on these equity markets. Now, I mentioned the PMIs, services falling to 55.9, manufacturing at 44.6, missing estimates. For more, let's get to our Bloomberg economics editor, Zoe Schneeweiss in Frankfurt. Zoe, these numbers, the data show the worst factory reading in 3 years. What's behind that?
So that's very much driven by Germany. German manufacturing PMIs also at worst in 3 years. So just remember that was back in May 2020. So not quite height of the pandemic, but very much an area where we still were, where most of Europe was locked down because of this. So, and here, when we break down and look why these people, why the numbers are so bad, it's very much that they say there's a lack of momentum coming from China. They were expecting China's momentum to then drive German momentum and in turn drive European momentum. And as we know, Germany is very much a manufacturing powerhouse and also the motor of the euro area. So those weak numbers are very much a concern.
Yeah, you paint perhaps a grim picture. What does that mean for overall growth then, Zoe?
So overall growth, as you mentioned, still is positive. So you mentioned services slowed a bit. The overall number also slowed, but it still is a very robust number. It still clearly shows there is growth. So it's a bit of a split. The split picture is obviously quite complicated and difficult to figure out what will happen here. With services also, just a reminder, services then there is a lack of, they don't have enough personnel. There also is the issue here that they very much then are driving inflation. So all this just shows a complete kind of difference between manufacturing and services. It's quite startling, really.
Yeah, a difference that doesn't seem to be resolving anytime soon. Zoe, thank you so much for joining us. Bloomberg's Zoe Schneeweiss in Frankfurt. Now, European financial policymakers and market watchers are meeting in Brussels today for the Institute of International Finance's European Summit. The Association for Global Finance Industry is looking at how to build sustainable growth after what has been a volatile first quarter. Let's go to Maria Tadeo, who's in Brussels, who's also at the Santander chair, Anna Botín. Maria.
Yes, and we are joined here in Brussels by Anna Botín, who's the executive chair at Banco Santander. You also chair this conference here in Brussels. Thank you for your time and the invitation. You were on stage and I was watching your conversation. You talked about a lot of issues, from growth to regulation. But before we get to that, I want to get your sense of, from your perspective, obviously it's a leading bank, it's a huge institution. How do you see European banks in what has been an interesting start of the year overall for the financial sector?
It's great to be here, so thank you for inviting me. Yes, you know, I'm chair now of the IIF. We are very, very focused on how can we make sure that the banks globally continue to be part of the solution as we were during COVID. So what's happened recently, first is really the context of we're back to normalization of rates. So we've had very low or negative rates for a long time. That creates a lot of misallocation of capital. You're going to continue to have bumps along the road. But this is not a systemic crisis. This is not 2008. Global regulated banks have risen the capital levels from 2 trillion to 6 trillion. So we're in a very strong position. Banks are resilient, and we are now having to work together. We should work together with regulators to see what comes next.
And would you say this episode is over? And again, a lot of that happened in the United States. There was Credit Suisse, which of course is not a secret. That was the Swiss regulator. But would you say this chapter is closed, or is there something that still lingers that may worry you?
Well, so, you know, 12 years ago, 50% of the financial system in the world were the banks. Today, that's 38%. So a lot of the risk is outside the regulated banks. And we've seen a lot of those instances with the pension funds in the UK, with Archegos and others, FTX. You know, there are some banks, regional banks in the US, that have a big concentrations on commercial real estate. You know, 70% of all the CRE is with the regional banks. So that is something that we should watch out for. But, you know, again, there's a big difference because the systemic interconnected banks are in a very strong situation. And so that is really important for the world economy.
And I want to ask you a question. I'm curious because we spoke with Jamie Dimon a few weeks ago, and he said something when it comes to the regulation. There's always been people who try to play the system when you look at maybe short sellers and who obviously have a vested interest perhaps at times to bring down a name or talk down a name. But he said when you look at social media, tweets, memes, all of this is new. Is that something that you go, regulators should look at that in more detail, because it is happening and a tweet can create a lot of trouble?
I've been saying for many years that we all need private sector, those that understand what is going on with social media, what's going on with the big tech platforms, governments and all of us in the private and public sector understand what is the regulation we need in the digital age, in terms of competition laws, in terms of transparency and privacy, in terms of how these networks are working, where you pay taxes. And so, yes, absolutely, we need to understand how it is that we need to regulate in a sensible way, in a way that allows us to invest in the green transition and the digital transition in a way that allows banks to finance the economy. But yes, we do need a new set of rules.
And you talk to social media giants at times and go, this tweet was inaccurate, it was proven wrong information and had a severe impact on the stock price. I mean, with money moving in and out.
Maria, I am in social media myself. So,
yes, but what do you see?
Well, I've seen what happens, and I've had let's say, an experience in terms of what it means to tweet on a personal basis. I think it's important because many times you and the media experts look more to the personal than to the institution, and so we need that as a defense. So at some point we might need to come out, or I personally as the leader, I don't do it for me, it's work, but we do need to be understanding and connecting with the audience and understanding what it means to be in a very interconnected age, yeah.
And before the start of the conversation, you mentioned what is, well, the key word now for a lot of players out there, financial players, which is rates. What do central banks do from here? European Central Bank, and I mentioned the ECB because we're in Brussels, yeah. European hours, it's assumed that they will hike at least 2 to 3 times more and then stay at a potentially higher for longer pace. For a bank, for financial institutions, what does that mean? If you assume, okay, we're approaching the peak, but it will be higher peak for a much longer period of time.
So the first thing to understand, and of course we have a lot of experience in emerging markets and inflation economies, high inflation economies. When your core inflation is 5 and interest rates are at 3, it means you still have negative real rates. Mm-hmm. And that is it's not easy to stop inflation with negative real rates. If you owe money, you're still able to repay quite easily. You have nominal wages rising faster than interest rates and faster than prices. And so at some point, Brazil, Mexico have very positive real rates. Here we still have negative rates. So I think you're still going to see that, it's not about to change. I think we will get stable or even higher rates in the next few years.
And for you, that's not a problem. It's the way it has to go when you look at the inflation data, you look at the macro data. It's what central banks have to do.
Well, so I said this a few months ago. Central banks have a very narrow path to walk on because they want to avoid a deep recession. But what is important is corporates and families' balance sheets are still strong. And so we are continuously surprised by the strength of the economy. If we look at our mortgage cost of risk in the UK, it's less than 3 basis points. In Spain, less than 10 basis points. Again, with negative rates and very high employment, and that's the other key factor. In 2/3 of our countries, we are at, peak employment. And so that is really what's helping, our customers, perform well. Now, again, at the bottom, the more vulnerable customers, small companies are suffering. And if we don't stop inflation now, it's going to be a big hindrance on growth.
And can I ask you, when it comes to also the regulation, there has been potentially out of a crisis, not to go wasted, to infuse momentum once again on, completing the banking union in the euro area. This has been a conversation for as long as I've been alive, almost, I think. When do you think this will come to an end? Will it come to an end? And when you hear we want to create big European champions, is there a number that you think in 10 years we're going to get 5 big banks in Europe? That's what the future looks like, but get the regulation done.
So first of all, I'm now heading the IIF, but I was head of the EBF. We commissioned a study, and we have all the data where being prudent, having very strong and stable banks, we could actually liberate up to 4 trillion of lending in Europe by making some adjustments. So, and let me just give you an example, securitizations. Europe has 6% of the securitizations that the US market has, 6%. Why not open up? And as you said it very well, banking union, we need European deposit insurance so we can have banking union, capital markets union, capital markets in Europe are now down to 10% of the global markets, where 19% 10 years ago. So those are the things we need to get right. And super important, the green transition, because that's a big, huge growth opportunity that we need to get right.
And just as a very final question, I'm going to be cheeky and ask you to maybe put the hat of Ana Botín, the chair of Banco Santander. There has been many reports that you're out there trying to figure out who's talented at other institutions, reports about Credit Suisse, or you were going there potentially to poach talent, bring the best to your own institution. Are you doing that? Do you have names that you want to get? And do you have names that are already on their way to coming over to your bank?
So one of the big success stories, and we gave the Investor Day, we gave these numbers at Investor Day, has been our corporate investment bank. So today that is about 30% of Santander's profits. It's been growing. It's a very different model. It's a sustainable, recurrent business model based on customers, based around in-market and global scale. And so we're always looking for talent. It grew 30% last year when other...
From Credit Suisse?
No, it was from everywhere. So we've brought people in from all the different banks, and we'll continue to do that because, you know, we need the best. And if we can attract them, it means we're doing something right.
And on that note, you say you want the best. Thank you so much, Ana Botín, for joining us on Bloomberg. It was very good to see you today in Brussels. Usually it's London. Today we're in Brussels, but here you go.
Miriam.
Thank you very much. Appreciate it. And now back to you.
Maria, thank you very much. That was our very own Maria Tadeo there speaking with the Santander chair, Ana Botín. Now, coming up, we're live at the Qatar Economic Forum. Bloomberg's Manus Cranny will be speaking to the CEO of the Qatar Airways. That's next. Plus, the UK's Business and Trade Secretary, Kemi Badenoch, joins Bloomberg's Stephanie Flanders. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, the Qatar Economic Forum is taking place in Doha. The event brings together government officials and key business leaders from around the globe as they shine a light on the world's major challenges in the major industries, of course, air being one of them. Let's take you live to Doha now. A man himself is always on the lookout for a good flight deal. It's Bloomberg's Manus Cranny with one of the most prominent features in aviation. Manus.
Danny, thank you very much. Yes, we have one of the stalwarts, the vanguards of the airline industry, the Qatar Airways Group CEO, Akbar Al-Bakr. Good to see you this morning, sir.
Thank you.
A full house. I hope they all travelled on Qatar Air to get here.
Well, most of them, yes.
Good. That'll be a bump to the profits. Talk to me about the revenge tourism. It's much maligned phrase. Are you full to the brim? and where is your strongest route?
Our load factors are extremely high. We are short of capacity. We need more aeroplanes. And unfortunately, I cannot tell you what is my profitable route because then my competitors will immediately put capacity on those routes.
Well, where's your highest capacity? Is it on Doha, London, Doha, down to the south?
No, actually, it is network-wide. If you go to the website of Qatar Airways, any flights there will be very limited seats available on those flights because there is such a big demand and a massive shortage of capacity, which was brought into because of COVID.
And that shortage of capacity, do you think it will be alleviated soon? I know you were at the travel market saying, look, I'm going to take deliveries quite soon. How much of a release valve on capacity do you expect?
When I say that we are going to take deliveries soon, it is for our expansion and increasing routes and reintroducing routes that we had already stopped during the COVID.
Which is going to be the most important route for you to go after again in terms of reopening?
A lot of routes that we had reduced because of capacity restraint and downfall in demand due to COVID. However, now that we are ramping up, we are introducing new routes in Europe, in Africa, in Asia, and of course going back big time into China.
How big back into China and how full are the bookings, the forward bookings on that?
Unfortunately, China is facing problems like everybody else, a shortage of labor, though they have, the largest population. But because of COVID, a lot of things changed in the labor market. And now it is difficult to ramp up again because of the long time that China was under lockdown.
So the ramp up issue for you is a constraint in China, not a constraint on your side, on planes and staff at your side?
Yes, there is. On staff side, no, because we are in such a perfect location that we have a huge labor market available to us around. What is a problem for us is delivery of airplanes, and we are not getting them due to the shortage of the supply chain.
And here's the point. Emirates are ready to order more planes. I was with Sir Tim just a couple of weeks ago. Ryanair are ordering more Boeing and Saudi Air are ordering. Do you think we're going to go into a much more extended supply chain bottleneck again?
Emirates is ordering more airplanes because they have a requirement for fleet replacement, in my opinion, because of a large number of A380s, which, is not the most optimum aeroplane for a fleet, but it's not my business to tell them what they want. Ryanair is doing it as a program of fleet replacement because their current fleet is getting very old.
But
we
yours
already
is about expansion.
We have the youngest fleet in the industry, and we have a huge order book that has to be fulfilled by both Boeing and Airbus.
And that's those ongoing discussions on the 787, the 737 MAX, and the 777X.
Yes.
Do you need to order more? If they're fleet replacing, do you think it's timely for you to jump ahead of the queue and order more than you have, or you think, Manus, I will settle and see?
I think I will settle and see because our fleet is already very young, so we can extend its operation further. And think when there are new technologies that will be introduced for us then to place orders for more aeroplanes.
Now, I don't get to travel business class on Qatar Air very often, okay? I will say I've got another brand. How much demand for business class seats have you got? Other airlines are saying to me, for every one business class seat, I've got 3-4 people bidding on it. How big is the bidding for your business class seat?
Huge demand. Our business class has more than 95% load factor constantly. And because we have such a premium business class that we are the first preference for people to travel.
Is there any cracks in that at all? Who's filling those seats? Is it leisure, business, and revenge tourist? Or is it business travel?
No, it is actually leisure and business together. And it has always been that way. Business class is never full only with businessmen.
The debate also is this. The era of low fares, I lived in Europe for 30 years, Ryanair, EasyJet, evangelized, commoditized air travel. Is that just consigned to history? I mean, have I just got to get used to 25% more expensive tickets?
I think, yes, you'll have to get used to it.
But if the capacity comes back, as you've suggested, on replacement fleet, on new fleets, will that materially cap the price rises or cause prices of the seats to drop?
People still want the comfort, they still want high-class product, and then people will be prepared to airline that provides that.
Now, you're famed for, you know, when airline plane makers don't deliver on time, and you've had some uncomfortable moments, let's say. Tell me this. Who do you trust more, Boeing or Airbus?
We trust them all, and we also mistrust them all, depending on the situation.
Well, if I said to you then, because you're going to have to trust them pretty hard to get these Boeings in over the fleet, you talked about more orders to come. Tie that down for the market this morning. Where are you going to expect the biggest deliveries, the earliest deliveries? Is it going to be on the 777X? Is it going to be on the 737?
I think both of the aircraft manufacturers have such a full order book that they both will have problem delivering aeroplanes to big customers with the numbers they want.
Do products like NetJet and private jet flights, are they snapping at your first class cabins?
No, not at all. Not at all. We are a very large operator of corporate jets under the brand of Qatar Executive.
How's that business doing? Just put some numbers around that.
That business is doing very good. We have over 25 corporate jets, and we have several on order, including the Gulfstream 700, which is a completely new product that will be introduced.
How big can that business become?
The business is big because there are still people that are high net worth who are using corporate jets, and they don't want to own their own corporate jets because it is cheaper for them to take from companies like us.
Akbar, great to have you with me this morning. I'm going to have to get used to 25% more expensive, but I have to try out your business class. Bakr al-Bakr there with the very latest view. Business class is full, it's booming, and of course, Danny, I've yet to travel private. I think some other people around me possibly have, but not me. Danny, good morning.
Good morning, Manus. Yeah, you need to make a few friends around there. I think if you want to travel private, take me with you, won't you? Manus Cranny there at the Qatar Economic Forum. Fascinating. I was talking to Neil Sorahan of Ryanair yesterday, who said the era of €9.99 tickets, that is over. All right, as we head to break, let me give you a quick look at what we're seeing in equity markets. They have turned lower compared to the start of the day. Ignore that second one there. That should be NASDAQ futures. NASDAQ futures, they are just treading water at this moment. It has been an outperformance of tech trading at its highest level since just about 2022. The euro, it has been weak today. There are fears about growth in Europe. Manufacturing turning its worst level in the most recent PMIs in 3 years. 2-year yields, those continue to chug higher. They are over 4.3% at this moment. Some bullish speak from Bullard as well. Coming up, we're back in Doha with a conversation with Hungary's Prime Minister. This is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation. Those are things that, you know, peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, you know, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability, you know, and we have differences. You know, we're capitalists, they're not, you know, and it's okay. We can sort that out, but we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Let's get your first word news now. And President Biden says he and House Speaker Kevin McCarthy had productive talks and agreed that a U.S. default is off the table. The two met at the White House for over an hour, but have still not reached a deal. Treasury Secretary Janet Yellen has warned it's highly likely her department will run out of sufficient cash in early June. McCarthy says he expects to speak daily with Biden until a deal is sealed.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion. We're going to have the staffs continue to get back together and work on some of the things that we had talked about.
Turkish President Recep Tayyip Erdogan has won the support of a nationalist rival, boosting to his bid to extend his rule. The long-shot third candidate, Sinan Ogan, has asked his supporters to back Erdogan in Sunday's runoff. Ogan was eliminated from the first round of balloting, with just 5% of voters backing his candidacy. Erdogan led the earlier vote, but fell short of the 50% majority needed for an outright win. A panel overseeing the credit default swap market has ruled that the government-brokered takeover of Credit Suisse does not constitute a bankruptcy event. Declaring UBS's acquisition of its smaller rival a bankruptcy would have triggered an insurance payout for CDS holders. The same panel last week ruled against a similar question related to the write-down of Credit Suisse's AT1 bonds. Two Fed hawks see the need for more rate hikes this year, days after Chair Jay Powell signaled a pause in June. St. Louis Fed President James Bullard said he's backing 2 more increases, while Minneapolis Fed's Neil Kashkari says a pause does not mean the tightening is over. Their comments bolster the case that they might skip a move next month while keeping the door open for further hikes. And Adani's group Port Unit is one of the first 10 entities it owns to recoup all losses triggered by Hindenburg Research's short-selling report in January. The conglomerate shares are rallying after a probe by an Indian court panel found no conclusive evidence of stock price manipulation as alleged by Hindenburg. The investigation continues. And that is your Bloomberg First Word News. We have more PMIs hitting the tape. It is UK manufacturing PMI coming in at 46.9. That is a miss. The forecast was for 48, so more weaknesses in manufacturing. When it comes to services, that also is slightly weaker than expected. That has fallen to 55.1. The forecast was for 55.3. But again, we continue to have this divide where manufacturing is exceptionally weak throughout Europe. For much of Europe, it has to do with the fact that Chinese data, Chinese support hasn't been there. Services, you still have a consumer that is doing well. And that's why you see this divide. It really is the services that are helping to hold up what we're seeing. Now, as we debate the global economy, it is a topic that is being debated at the Qatar Economic Forum. Let's take you back to Doha, where Bloomberg's Jennifer Zabazadeh is joined by the co-owner of one of the most famous NBA teams, as well as a lot other on his CV. Jen.
Yeah, hi Danny. I'm joined now by Stephen Paliuca. He's the co-owner of the Boston Celtics, and he's also a senior advisor at Bain Capital Private Equity. Steve, thanks so much for making the trek over here to Qatar to speak with us. It's a big time for you and the Celtics, as Danny mentioned, one of the biggest NBA teams. Talk to us about, we're approaching the offseason. What is it that you're anticipating in terms of investments and potential changes you might need to make in the offseason?
Well, we don't really talk about that at all until our season is over, and right now all the focus is on how do we beat Miami. We'd like to see a win tonight. It's been a very tough series for us, and we haven't shot well. But all the focus is on how do we beat Miami.
But the Celtics are a very talented, very experienced, but very expensive team. So I imagine that you as a co-owner are thinking about some of this, right, going into the next season?
Well, again, I don't want to use the old cliche, one game at a time. We're really thinking about how do we win this game, and then we'll sit back and reflect in the off season. We have a fantastic staff, fantastic co-owner Wick Grosbeck leading the charge, and we'll figure out what our next steps are as soon as this season's over. But we've had a fantastic season, and hopefully we can make history and win 4 in a row here against Miami. Miami's playing very, very well. Fantastic job they're doing. We just got to hit some shots, and hopefully the ball will fall in for us tonight.
Yeah, we'll definitely have to see how that pans out. Steve, you and I are going to speak tomorrow on a panel talking about global sports and really the role that we're seeing sovereign wealth play, institutional funds play. Do you think this is all good, all of this money that is flowing into global sports? Is it good for the fans? Is it good for the investors?
I think it's great for everybody. Sport programming, especially the global sports like soccer/football and the NBA, are really one of the few things left where it's must-see TV and aggregates a lot of eyeballs. So live sports programming is a crown jewel of most broadcasters' empire. And so the rights have been going up. What's really happened, we bought the team about 20 years ago, and 20 years ago there wasn't streaming. There basically was on cable and regional cable. The whole world's changed now. The sports have globalized, and the technology has changed it dramatically, as you're seeing on Twitter, Facebook, all the social media, Instagram. So sports has become central, and it's one of the few things that can attract hundreds of millions, if not billions, of fans when you look at the World Cup and you look at the Premier League, Serie A, all the soccer teams, the NBA. The NBA was actually very early in globalizing. I know David Stern was criticized by many for coming to Europe and Africa and all the places 15, 20 years ago, but now that's really borne fruit. There's over $1 billion of revenue coming in from international rights for the NBA.
Do you think that is contributing then, all of those factors that you just mentioned, to skyrocketing valuations that we're seeing?
Absolutely. Television revenue has gone up 5 or 6-fold, and is expected to go up again now because of the voracious appetite for this programming.
But how will then that affect who's actually coming in and buying some of these teams? As we mentioned, we're in Qatar, which this country is considered buying a team in and of itself. I mean, what do you think from a sports fan perspective, what that's doing?
Well, I don't really think it affects the fans as much. The more that's invested in sports, better for the fans. The NBA is pioneering, looking at 3D, applications, how you have a better fan experience, different television angles. You can get different views from the baseline. So you're seeing this technological revolution powering the fans. And then in stadium is also incredible with giant jumbotrons, and there's not a dull moment. If you went to a Celtics game 25 years ago, there was dead silence at the quarters, and you'd hear a buzz of the crowd talking. Maybe there was an organ there. Now it's non-stop activity. So both on television programming and in the stadiums, there's been great technological change, and it's been a great experience for fans. And fans can get closer to the players because they can communicate directly through Twitter, Instagram, and all the social media that's out there now today.
All right, Steve, thank you so much for your time. Steve Paliuca joining us. He's also, as we mentioned, or as we forgot to mention, a Serie A co-owner as well of the Atalanta. So a lot of sports ownership here with Steve Paliuca. Thanks so much for your time. So much. Danny, back to you.
Jen, a fantastic conversation. What a great tee up for the Miami game. Jennifer Zabazadeh at the Qatar Economic Forum there. All right, let's get to some of your top corporate stories with the Bloomberg Business Flash. JP Morgan is set to gain an even bigger boost from rising interest rates thanks to its purchase of First Republic Bank. JP Morgan has raised its guidance for net interest income this year to $84 billion. That's up from $81 billion. But the lender also sees second quarter revenue from trading and investment banking to each slump 15% from a year ago. First Citizens has sued HSBC for allegedly raiding dozens of employees from Silicon Valley Bank as First Citizens was taking over the failed lender. The complaint filed in a California federal court accuses HSBC of poaching 42 bankers and misusing SVB's confidential, proprietary, and trade secret information. HSBC's spokesman declined to comment on the lawsuit. Mizuho Financial Group is forging further into U.S. investment banking through a $550 million deal to buy Greenhill. The Japanese giant will pay $15 billion a share in an all-cash transaction. Shares of Greenhill climbed 116% at the close of U.S. Monday trading session. Mizuho plans to complete the transaction by the end of the year. And that is your Bloomberg Business Flash. Let's get a quick read on where we are in this equity market. It has been not the best day. It has been a down day despite the fact we had a risk-on boost to start the day, despite the fact we had a really strong U.S. session when it came to tech yesterday. It is the story of tech being the haven, tech and AI being the safe trade where folks want to hide out as we're uncertain of this economic environment. Now, speaking of the economic environment, we have had a whole host of PMIs come in. For the most part, PMIs, when it comes to manufacturing, have been weak. In the UK, it was a miss for manufacturing. In Germany, it was a miss too. So there's that concern of China and its ability to really support this economy. All right, speaking of the economy, let's take you back to the Qatar Economic Forum. Bloomberg's editor-in-chief, John Micklethwaite, is in conversation with Hungarian Prime Minister Viktor Orban. Take a listen.
The basic issue with Ukraine, it's a sovereign country that was invaded by Russia, just as you might say Hungary was invaded by the Soviet Union back in 1956. I just watched a video last night. Your great heroes were people like Margaret Thatcher and Ronald Reagan and John Paul II, who supported Hungary during that. Yesterday, your foreign minister said you would block the aid that the European Union wants to give to Ukraine at this particular time. And I wonder how you, a country that is, you have been invaded by Russia, you know what that is like, why you do that.
First of all, thank you very much for the possibility to have that conversation. One small additional remark. 17 years in power and 16 years in opposition. That's equally important. Anyway, on the war issue, you should know that Hungary has a very unique situation in this whole war because Ukraine is not a country far away. Ukraine is our neighbor. Second, we have minorities, ethnic minorities living in Ukraine, 200,000 something. And they are part of the war. They are conscripted as soldiers to the Ukrainian army, and they die. So we lose lives daily, Hungarian lives as well. So therefore, we consider this whole situation from a special angle. So we do not belong to the mainstream European approach. And my position was, or the position of Hungary was, the very first moment that this war is the failure of diplomacy. It should have never happened, that war, outbreak. So looking what's going on the front line, for us,
The Hungarian Prime Minister Viktor Orban there speaking with Bloomberg's editor-in-chief, John Micklethwaite. We will return to that conversation. But first, Stephanie Flanders, head of Bloomberg Economics and Government, is in Qatar with a senior UK government minister who is visiting the Middle East to boost trade. Stephanie.
Well, thank you very much. Yes, Kemi Badenoch, who is the Secretary of State for Business and Trade in the UK. I guess we should start by asking you, what you plan to achieve here? I know you're on a mini tour of the region.
Yes, today I'm at the Qatar Economic Forum, of course, so thank you for hosting. But actually, this is all part of a week-long visit to the Middle East as part of our free trade agreement with the Gulf Cooperation Council, which we are negotiating. So this is a region where personal contact is absolutely critical. I need to meet my trade and business counterparts, and a lot of the stuff that we are doing actually relies on getting to know who the people that we are negotiating with, understanding what their concerns are. So it's one of my department's 5 priorities, just signing high quality trade deals, which should help us drive exports, get lots of investment into the UK. We want to be the top investment destination in Europe, and that's why.
And we're going to be talking about, we actually have a panel later on about the structure of trade and how the world's changing. But of course, Britain's biggest trading partner right now is, and for the foreseeable future, is going to be the European Union. And there's lots of concern, as you know, among car manufacturers in particular, about what the impact of implementing the rules of origin, full rules of origin, will be. So how can I just ask you where you are in negotiating some kind of fix to that?
So the EU, you're right, is our largest trading partner. We have a free trade agreement with them. But the terms in which we wrote rules of origin conditions don't work now with rising prices of components. This is not a UK problem. It is an EU-UK problem. It works both ways. So both sides are actually interested in looking at what we can do in order to resolve that. The trade and continuity agreement is up for review in 2025. We're looking to see what we can do in advance of that because, as you know, there are lots of global headwinds that are affecting the car industry, which means that this is an issue that needs resolution sooner rather than later.
Well, are we looking for a short-term fix then before 2025, extending the transition arrangements?
So when we make a final decision, we will announce. We're still in the process of negotiating and discussions with our counterparts. But what I would want to say to car manufacturers is that we're very alive to this issue. We have been looking at it long before the story, the most recent story with Stellantis broke. This is something that officials and ministers have been working on along with our international partners. So we should see an answer soon.
And will it be rules of origin? I mean, there's quite a lot of features of the Trading Cooperation Agreement which have been put off and not been fully implemented, which always somewhat suggests that it was not a great trade deal to begin with. I just wonder whether, if you were still Trade Minister in 2025, would that be your priority for fixing rules of origin?
Every agreement needs constant improvement and updating. There is no agreement that is perfectly fixed in time. That's why many of the free trade agreements which we're negotiating are actually upgrades to existing ones. As soon as something is written down, the world changes, things move on. So, no, I don't accept that this was not a good agreement. What we do know now is that the world has changed from when we signed that. If I had written a trade agreement in 2016, it would not have lasted for 2019. It would not have lasted for the pandemic if we'd done one just then, and so on and so forth. And look at what's happened with Russia, Ukraine. Quite a lot of the things which we had put in place just don't work given all the things that are happening in the world. And what we need to do is to be nimble and respond as quickly as possible.
What we have known for a long time was that the car industry was moving towards electric cars.
Yes.
And as you know, there's enormous concern around the lack of scale for battery production in the UK and being, in effect, caught in between the US and the EU on this. How important is it that Tata chooses the UK, not Spain, for its battery plant? And what are you doing to
Well, we want as many people as possible to invest in the UK. The transition to electric vehicles is one that's happening globally, in particular in the West. We have known for a long time that these things take time. You can't just spring up a battery factory in a matter of months. And it's all about making sure the supply chain is there and it's integrated with the manufacturing sector as well. These two things go hand in hand, but also with the supply of critical minerals. So it is very important that we continue to attract investment, whether it be Tata. We have a gigafactory in Sunderland with Envision. We want to make sure that they stay here, and we have the right incentive package for them to do so. what the Chancellor has said and what the Prime Minister has said is that we're not getting into a subsidies race. If you have a subsidies race, someone's going to lose. Our job is to make sure that the UK doesn't lose, and we need to have a package that is right for our economy and the industry.
Are you still fighting for Tata, or because we hear that they were perhaps leaning towards Spain already?
There are always rumours. There are always rumours.
You haven't given up. How important is it?
I just answered. Of course, it's extremely important. But as you know, it's a live negotiation. Tata will make its decision. We're doing everything we can to show that the UK is the best place for them to invest. They have a long-standing relationship with us. You look at JLR. You look at the steel factory in steelworks, in Port Talbot. We have a strong relationship with Tata. I was in India just a few months ago. We have a free trade agreement which is going to benefit, that we're negotiating, which is going to benefit them. So we're doing everything we can, but negotiations are still ongoing.
On the India trade deal, I mean, obviously one of the things that the Indians are concerned about is improving the conditions for visas, making it easier for skilled Indians to get visas. That's been a stumbling block. Obviously, the politics around migration extremely hot at the moment.
And so it's really important that we separate migration from mobility for business. They're not the same thing. We don't deal with migration as a whole in free trade agreements. It's only really business mobility. And it hasn't been a stumbling block. It is just one other thing that needs negotiating. If all these things were easy, we wouldn't need
this year. Is it going to happen this year?
I'm not giving a date. Previous ministers have given dates, and then the political environment and the economic environment have changed that. It's about the substance and about the deal, not the day. And so what I'm working on is making sure that we have a high quality deal for the UK.
Okay, the last question. Are you worried about, there are a lot of senior business leaders, Dyson, from different industries, talking about Britain as not being open for business, about worrying about the climate, worrying about the government's approach to business. Who are you talking to? How are you trying to confront them?
So I am meeting at least 2 CEOs a week for very large companies, for 100 companies. They are saying different things. What James Dyson says is very different from what the CEOs of banks say. They do worry about the global economy, and they want to know that the UK is going to continue to be a stable place for them to invest. There are some incidents, for instance, the Microsoft Activision ruling that came from the CMA, which they complained about. I don't think that's actually a sign of the UK not being a good place to do business. That was a ruling that was made because it impacted competition, and it didn't look like it would be good for consumers from our regulators' perspective. So we need to look at all of those things in the round. But we are having good conversations with business. We're making changes such as the Chancellor's Edinburgh reforms. We're looking at encouraging listings in the London Stock Exchange. But we are open for business, and we have a good relationship with them.
Secretary of State Kemi Badenoch, thank you very much.
Thank you, Stephanie.
Thank you.
Stephanie Flanders there, head of Bloomberg Economics and Government. Thank you so much for that conversation. All right, let's take you now back to Bloomberg's editor-in-chief, John Micklethwaite, who's currently in conversation with Hungarian Prime Minister Viktor Orbán.
Leadership means that we are led by institutions, and the job of the politicians to operate properly the institutions, which is a nice idea anyway, when everything is going well. But when there are difficulties, it does not work. Institutions are not helpful. We need leaders, human beings, who make decisions, take the responsibility, and so on and so on. So now we are living in difficult times, and European Union does not have that kind of leadership.
The British leaders spent years complaining about the bureaucracy of Brussels, the blob, as some people called it. Surely you're in the same position as that.
Yeah, the bubble is awful, yeah, in Brussels, in fact. So it's the whole life of European Union is over-bureaucratized and over-centralized, no question of that.
You mentioned decoupling, and I've seen you've done a number of deals with China, and I'm going to try and generalize for the audience. You know, you have tried to take slightly the same attitude with China as you have done with Russia, that rather than being part of the Western side, you want to be one of the leaders of the rest. You want to be one of the people who is trying to link China and the West.
No.
Is that a reasonable way to look at it?
No, we don't have that ambition. The reason is that connectivity is a good thing. We have 10 million people. The export is 80–85% of our GDP, so we are a very open country, and we need commercial and trade and political connections. So believe we believe connectivity. So China is a huge opportunity. Why we should miss it?
I suppose many people would argue because China could be the long-term opponent of the West.
Or partner.
Or partner.
It's our decision.
That may be, very quickly, that may be an area on which you disagree with Donald Trump, for instance.
Probably. Let's wait him come back and discuss it.
We will come back to American politics at the end. I wonder if the applause is for the idea of Donald Trump coming back or for the idea of him not coming back.
Understandably.
Yesterday, to come to what you're doing here, you signed an energy deal with Qatar for the purchase of gas, and you said it's always better to stand on several legs than just one leg, which was presumably a reference to Hungary's reliance on Russia for gas. Can you give us any idea about what will come as part of that deal? How much gas will you get from Qatar?
The negotiations are still going on, first of all. Second, Hungary is a landlocked country, which means that we cannot neglect the energy coming from Russia by pipelines. So half of the Hungarian needs of energy are coming from Russia, long-term contracts. And the other half, we have to find other partners. So we are looking for partners all around the world, and Qatar is a potential partner for us. But you know, everybody's queuing at the door of the Qataris, so it's not easy to get there and to sign a deal. But even if we are able to do so, it could start not earlier than 26, because till then the Qataris are fully occupied by. So we hope that we can cooperate. Qatar is a country which we respect very much. Without them, Europe would have been in trouble last year. And we try to build up a more strategic cooperation with them, not just energy, but at the same time agriculture, IT, and basically some security issues as well.
Do you think you will get, there's talk in Budapest that some people think you'll get the Qataris to help you buy back the airport in Budapest, which you have been looking at?
Yeah, Hungary, the main value of Hungary from your point of view probably is the geographical position, because we are in the middle of Europe, in the middle of Central Europe, and all the roads are running through Hungary from north to south and east-west. Airport has a strategic importance for us. Qataris are interested in. There is no decision yet. We are still negotiating. We would be happy to welcome them. They are still there in Hungary as investors.
So you would like to get Qatari money to help you buy back as an investor.
Yeah. But we are ready to be involved as well. So strategical investments, what we need in Budapest in the airport. It's not just to buy out, but to have a big scheme to develop it as one of the competitive airports in the European market.
Your critics would say that on getting rid of that tie with Russia to do with energy, you have been perhaps slower than others. You've done deals with Gazprom and things like this. Just as an example, you still have Russia's state nuclear company, Rosatom, building your nuclear power plant. By any measure, it's not going particularly well, partly because of sanctions and so on and delays. Surely that is a place where you could just drop the Russian company and get a move on.
Well, you know, so we are not in hurry in that respect. In Hungary, back to 60 years, we have a Russian technology-based nuclear power station, which is functioning very well, and the Russians were always reliable partners. And we would like to enlarge that nuclear power station. And to enlarge based on a different technology, it's very risky. So if we would like to enlarge on the same site, we have to use the Russian.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Elusive agreement. House Speaker Kevin McCarthy says he and President Biden had a productive talk, but haven't yet reached a deal to avert a debt default. Hawks rebuttal. The Fed's James Bullard and Neil Kashkari say more hikes could be needed this year, days after Jerome Powell signaled a pause next month. Plus, the Qatar Economic Forum kicks off in Doha, where we'll be speaking exclusively with global leaders in business and in politics. This hour, we hear from the CEO of TikTok. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Ongoing debt conversations in Washington. We're still not there yet, Kriti, in terms of getting a deal. The mood music might be a little bit better, but no deal yet. Add to that a little bit of hawkishness from Fed officials.
Yeah, and I would say that reassurance from lawmakers that don't worry, we don't know how we're going to get that deal done, but we will indeed get it done. That seems to be at least the one thing that they can agree upon. But Anna, when you look across Wall Street, essentially the estimates here of just how far the debt ceiling kind of trigger could be goes anywhere from June 1st to June 15th. And that really varies based on the bank that's making those estimates. But Anna, to your point about this kind of stalemate that you are seeing in Washington, well, showing up in futures yet again, it feels like every day, day in, day out, we check futures right at the start of pre-market trading, and they are mostly unchanged. That's a similar story you're seeing today, 4201 for S&P futures, but technicals matter here because 4200 is now the new round number to keep an eye on when we look at those contracts. So really keep an eye on what kind of resistance you're going to be seeing from that level. The two-year yield also continues to surprise, 436. And this is where that hawkish rhetoric, Anna, really comes into play here. As we see the likes of James Bullard, who's kind of seen as being ahead of the pack when it comes to kind of his outlandish takes that sometimes come true, and more often than not, 436 on that two-year yield, starting to see a little bit of those yields creep higher by about 4 basis points. To see that kind of movement at about 5 a.m. New York time is pretty significant when, again, you talk about just what is getting priced into the market. As those yields climb, the dollar follows. A lot of this is coming, though, from both weakness you are seeing in the Japanese yen, but also strength you are seeing in the cable rate. So you are seeing a little bit of a tug of war when it comes to the FX market, something we're going to dive into in the Asia story in just a moment. Right now, the Bloomberg Dollar Index unchanged, but gold, I'm swapping out oil for gold. gold, Anna. I'm sure you'll hit oil in a second, but gold at $19.59. If you were worried about a debt default, you were likely to see a bigger jump into gold. And we saw that for a couple of weeks before we retreated away from almost hitting those record high levels, down about 0.6% on that precious metal. A quick check on those Asian markets, though, because you are seeing some weakness when you look at the Nikkei, down about 0.4%. Their first down day after an 8-day winning streak. That's going to be significant, not just for the Japanese markets, but for the South Korean market as well. The TOPEX is something you want to keep an eye on, and the KASDAQ as well over in South Korea. The dollar yuan story, the offshore yuan, you are again seeing some weakness there, of course, as the PBOC really tries to say, look, we are going to stay calm. We are not going to kind of spook the FX market. No averse signals. 706 on the offshore rate. Strength, though, in the dollar to tune of 0.2%. Of course, iron ore, when you're talking about that Chinese recovery, iron ore is going to be very significant in terms of that trade. Right now, down about 2.7% on concerns that the Chinese recovery, Anna, is just not coming fast enough.
Yeah, and certainly this time yesterday we talked about some of those mining names being under pressure as a result of the few days of weakness we've seen on the commodities front. This is the picture across Europe then, Chrissy. We've got European stocks under a little bit of pressure, but actually it's quite a divergent picture across European markets. The FTSE 100, some of the northern European markets and the Spanish market looking pretty flat. Elsewhere, a bit more weakness. The French market, down by just over 1%. So we've got some weakness coming through in some of these areas of Europe. Let me show you some individual stocks and some other macro themes that we're tracking today. A big focus on financial services today. Julius Baer down by 7.4% over in Switzerland. The wealth management business not getting the benefits from the collapse of Credit Suisse that perhaps some in the market had expected. And so that stock is down, as I say, by more than 7%. Société Générale, this one just a sort of diary event to mark, but it is seemingly having an impact on the stock because the share price is outperforming the rest of the banking sector today. The French bank up by 2.3% as a new CEO comes into the business, nearly 15 years or so with the former CEO. So that is a big change over at Société Générale. The pound is down 0.2%. It was down actually more than this a little bit earlier on this morning, and we've then seen some data coming out around the UK, and we continue to be in negative territory on the pound. It's interesting because the data, yes, it pointed to a little bit of a pullback in the services sector, but the services sector still quite strong, and a lot of concern about the stickiness of the inflation impulse in services. So how does that add up to expectations around the Bank of England? Well, Market, who published those PMI figures, certainly suggesting we will see further hikes from the BOE. And Brent crude, you're right, Chrissy, I did include Brent, and we've got that particular price down by 0.3%. But I just included it as an excuse, really, to talk about what we heard from the Saudi energy minister, who basically issued a warning. Watch out, he said, to those who speculate on oil prices. He said, we surprised you back in April with that cut to production. That was a surprise for the markets, and there is a meeting coming next week. So who knows? Will we get another surprise, Chrissy?
Yeah, a dire warning coming out of the folks over at OPEC, and I would say a similar warning coming out of Washington, at least one where they're saying, don't worry, things are going to be okay. President Biden and House Speaker Kevin McCarthy remained without a deal on the debt limit last night after another round of talks, but the speaker still remained optimistic.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion. We're going to have the staffs continue to get back together and work on some of the things that we had talked about.
Joining us now, waking up early for us, Jack Fitzpatrick of Bloomberg Government, joining us from Washington. Jack, how close are we to kind of hammering out the details here? What are the sticking points?
Well, nothing's agreed to until everything's agreed to, so there are still a lot of sticking points. They're talking about spending caps and spending cuts. There's still an insistence that the Republicans want cuts to discretionary spending, the government funding bills that the Congress does every year. The White House said maybe they could freeze spending and agree to something along those lines. Republicans have said, no, it needs to be spending cuts. They're still talking about how many years of spending caps would then limit the growth of federal spending. They're still talking about stricter work requirements for things like SNAP nutrition aid. Energy permitting is still an issue that doesn't seem to be as much of a sticking point, probably as just the spending cuts and caps. But really, they can't lock any portion of it in until they've agreed to an overall deal. The good news, though, is that they seem to be expecting something in the very near future. They're postponing other work that Congress was supposed to do on other bills today. So it is possible that things come together very soon. But there are still a number of sticking points that nothing's really carved into stone on this deal so far.
Okay, so nothing carved into stone, even if the framework of a deal perhaps is in sight. We will see whether we actually get that nailed down. But even when it is, Jack, if it's nailed down by those in the room, it has to be sold to lawmakers more generally. Talk us through the timescales. What time is available and what time would be needed to get Congress approval?
That is a very good question. That's really the question of the day, because we're getting to the point where somebody's probably going to have to skip some procedural steps in order to get this done in time, unless there's a deal just about now. McCarthy has promised his members, the House Republicans, that they will get 72 hours to read this before a House vote. That puts us to at least Friday. There's an expectation that they could be voting on the weekend. Really, when this gets to the Senate, typically the Senate would need a week or so to pass anything unless they get unanimous consent from all 100 members to skip a procedural step. If the debt limit deadline actually does turn out to be around June 1st or 2nd or so, we'd be bumping up against that unless there's a deal right now. So there's going to have to be a conversation about whether they either skip their 72-hour rule in the House, or can they get the most cantankerous senators to agree to skip some debate in the Senate. That's probably the more likely option, and that will come with its own discussion about, does somebody demand an amendment vote, or what do you need to do to get unanimous consent in the Senate to speed up consideration of this? But that's the conversation they're about to have.
Okay, Jack, thanks very much. Jack Fitzpatrick of Bloomberg Government with the latest on what any framework deal might look like and the timescales involved. Let's talk about the global growth story. Eurozone manufacturing activity shrank this month at the fastest pace since the pandemic. We'll get US PMI data at 9:45 a.m. Eastern Time. Joining us now to go through some of the numbers is Bloomberg's Valerie Teitel. I talked a little about the UK PMI earlier on, but you've got the details on that and also the Eurozone story then, Valerie.
Yes, I do, and it was the fact that the manufacturing PMIs that stuck out in both the Eurozone and the UK today. In fact, in the Eurozone, the manufacturing PMI came in way below estimates, but it actually came in at a 36-month low. That's telling us that the weakness in German manufacturing is really having an impact on the broader region. Now, services came above expectations and still in expansion territory, but broadly overall, it shows us that the pace of growth eased somewhat in May for the Eurozone. But let's flip on and talk a little bit more about the UK. In the UK, both the composite, the manufacturing, and the services came in lower than estimated, and the manufacturing exactly came in lower than all estimates, Anna. It came in especially weak. And then there was a bit of bad news for the Bank of England in here. The underlying component of prices paid increased the fastest in 3 months. That is not a good sign for the Bank of England when they're worried about their inflation fight. But buckle in, we've got the US PMIs at 9:45 as well.
And of course, a little bit more coming out from the U.S. as well. Valerie, some contrarian speak, some hawkish Fed speak over the last few days. Walk us through why comments from James Bullard are such an important factor to keep in mind.
Yeah, so Bullard was out speaking yesterday claiming that we need more hikes, and not just more hikes. He specifically said he thinks that we're in for 2 more hikes later this year. Exactly when, he was unsure, but he wants them sooner rather than later. Look, that's not completely a surprise. We know in the dot plot there are some dots up there calling for 2 or 3 more hikes this year, and Bullard is one of the most hawkish. We also heard from Kashkari. Now, I think his comment was very insightful. It's important for him that it is communicated that even if we do pause in June in the next Fed meeting, that they communicate that we're not done. And I think this is something we're likely going to hear from other Fed speakers. As the year goes on, the Fed members are going to continually communicate that the Fed is in a hiking bias, even if they do take 1 or 2 meetings off. All of this have seen a lot of pressure on the 2-year yield. I kind of cherry-picked the date, but if you look in the exact 9 days, Critty, this 2-year yield has risen 45 basis points. It really makes the standout of the NASDAQ tech performance stand out even more when you see that it's been on the guise of yields higher.
Okay, yeah, it certainly does. Thanks very much, Valerie Teitel there with the latest on the Fed language that we're hearing and the underlying growth stories that are developing globally. Now, to the Qatar Economic Forum, which is taking place in Doha. The event brings together government officials, key business leaders from around the globe as they shine a light on the world's major challenges, also taking a focus on some of the regional issues as well. Speaking at the conference, Saudi Arabia's top energy official issued another warning to oil short sellers.
I think the speculators, like anything in any market, they are there to stay. I keep advising them that they will be ouching. They did ouch in April. I don't have to show my cards. I'm not a poker player and I don't know how to play poker, but I got it from a movie somewhere. But I would just tell them, watch out.
Bloomberg's Manus Crowley joins us now from Doha. I'm sure you enjoyed some of that exchange then, Manus. How ready do you think OPEC Plus are to act with cuts? They have already caused speculators to ouch, to use the language there of the Saudi energy minister, and a warning from him about pain to come.
Look, the market's very nervous, Anna, isn't it, in terms of the supply side, the China reopening narrative. I mean, that is his stock and trade phrase about wanting those short sellers to ouch like hell. Now, it comes down to when you look at positioning in this market, it is dominated by huge short positions, perhaps the biggest short positions by the non-commercial part of the market since 2011. But he went on to talk in there about an uncertainty gap. We're obsessed, you, me, Fran, and the oil team from Bloomberg, about the myopia of the next 1 month, 2 months, 3 months. And I think he's trying to sort of say, look, our role is about fiscal discipline within the oil market on a slightly longer-term trajectory. His phrase was, you know, policymakers are not daring enough in terms of the investment program, and that's part of what we're debating here at the Qatar Economic Forum. The transition, a just transition from the north to the south, and what does that mean for the energy complex? He was, I would say, scathing in regards to hydrogen, blue hydrogen, green hydrogen, pink hydrogen. You know, who's going to buy hydrogen and at what price? So the table is set. I mean, he may not be a poker player, but he is a man of great theatre. So there's the Royal Command has gone out. We're on our way to Vienna, another road trip to Vienna, and you can be pretty sure that that's where that piece of theatre will play out. As Bakr al-Bakr sat down with me, the CEO of the airline Qatar Airways, and made it clear that China's reopening, it's not an easy trade. He can't scale up. That's the problem in China, Anna, is that they have bottlenecks, and so that may put a limit on demand. Ms. Edwards, good morning from Qatar.
Manus, I'm going to take it from here. It's good to see you as well. Walk us through what else we can expect from the Economic Forum.
Look, I think we're going to build up. We've heard from Viktor Orban, editor-in-chief. John Makerthwaite did that interview. There can be no peace in Ukraine without a U.S.-Russia peace. I think that's an interesting piece. I've got the Georgian Prime Minister tomorrow. So we're going to talk to him. They still haven't come on board with sanctions. They have had the air routes with Russia reopened. We're going to talk a little bit more about the future of capitalism. Yes, get ready for a panel on that. Doing the preparation for the future of capitalism. I mean, I deal with many existential issues in my brain on a daily basis. But, you know, are there existential threats to capitalism? We need a more equitable world. That's going to be MasterCard, along with the Commercial Bank of Kuwait, etc. I think there's some pretty good conversations coming up this afternoon, again, around security. And that I have never seen, there's 3,000 people due here today. I saved a few souls, and I opened the door, and I let them in. I just hope they repay me with kindness. Ladies.
I hope they do. Some heavy subjects then on the agenda over there in Doha. Thanks very much to Manus Crowley for giving us a sort of upsum of what we heard from that panel on energy markets. Much more to come from the Qatar Economic Forum in Doha. Later this hour, we'll bring you a live panel discussion with the CEO of TikTok, plus many more conversations with global leaders at that forum throughout the day on Bloomberg. We'll hear from Standard Chartered CEO Bill Winters and the Boeing CEO Dave Calhoun, among other voices. And happening right now in Doha, Bloomberg's Stephanie Flanders is speaking with Saudi Arabia's Minister of Investment. You can continue to watch that conversation and others. If you want to stick with the coverage from Doha, go to Live Go on the Bloomberg terminal. This is Bloomberg.
The Gulf
and Asia as the future, it's very easy and is common to look at the UK as the past and a country that is pushing itself perhaps.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Look, there's something interesting going out in the market right now as we await all the kind of doom and gloom that's there, monetary policy, geopolitics, and of course, the debt ceiling debate. You are seeing an interesting play in the markets. Essentially, buy tech, sell bonds. At least that has been the trade on the front end of the curve for the last 9 days or so. Really important to talk about this dynamic because a year ago, if you had seen higher yield and higher tech at the same time, our heads would have been spinning. That inverse correlation between the bond market and the stock market just no longer exists. For our radio audience here, we're looking at a chart of NASDAQ futures and two-year yield that essentially look like one line. They are both moving higher, and it really speaks to the idea of is this kind of trade in tech actually kind of creating those bubble fears that we traditionally associate with a tech heavy rally. We're going to bring in a true expert here. Bloomberg Equities editor Ksenia Galuchko joins us. Ksenia, it feels like the signs of a sustainable rally in the stock market is breadth. But is a tech heavy rally, given the weighting in the S&P 500, that bad of a thing? What do you think?
Yeah, it's definitely been a very, very narrow breadth of a rally this year. Some experts say that it's the narrowest breadth of recovery in the U.S. stock market in 30 years because it's mainly been led by a few of these stocks that are powering the NASDAQ higher. So it's really the mega cap tech stocks that have been driving investor interest. And the main reason has been that investors are hoping for pausing rate hikes. And at the same time, in a defensive rotation after that financial crisis that we saw in March among municipal banks, investors started rotating toward more defensive and stronger corporate earnings, and tech is able to offer these things to investors.
Okay, offers strong corporate earnings, also offers the ability to mention AI every sentence during earnings calls, which maybe is what some people seem to be trading on right now. Ksenia, let me ask you about various or divergent calls, seemingly divergent at least, calls on where stocks go from here then, because this is what we've seen over the last 9 days. We can contrast perhaps what we're hearing from Morgan Stanley that have been describing the recent rally in stocks as a bit of a head fake, and Bank of America, who are increasing their year-end targets. Where do you see this sort of disagreement, if it is that, falling out?
So looking at the average target for the S&P 500 for the end of the year, analysts in general, on average, see a bit of a downside from here, about 4%. And even with this Bank of America upgrade, they only see 2.5% gain for the S&P 500 from current levels. So it's really quite muted gains from here, just because we've seen such a big rally. But history shows that with the S&P 500 gaining about 8 to 9% in the first 100 days, that bodes really well historically for the returns for the rest of the year. And S&P 500 could gain as much as 25% this year just based on this first 100 days of the recovery. Obviously, lofty valuations and possible contraction in earnings are major risk, as is the U.S. debt ceiling negotiation that is just dragging on.
Yes, it is. And we haven't got to the end there yet, have we? Ksenia, thank you very much. Bloomberg's Ksenia Galushko with the latest on markets. You can get further market analysis. Check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability. You know, and we have differences. You know, we're capitalists; they're not. You know, and it's okay. We can sort that out. But we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority.
Welcome back. This is Bloomberg Surveillance Early Edition. Coming up on the program, the Qatar Economic Forum is underway in Doha. We've been there already. We've got a sense of what is on the agenda. We're going to be bringing you a live panel discussion shortly with the CEO of TikTok. That conversation coming up shortly from Doha at the Qatar Economic Forum. This is Bloomberg.
most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad, isn't it?
From age, what, 5,
well,
6?
Maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business and fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, and the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. An elusive agreement. House Speaker Kevin McCarthy says he and President Biden have had a productive talk, but haven't yet reached a deal to avert a debt default. And a hawks rebuttal. The Fed's James Bullard and Neil Kashkari say more hikes could be needed this year, days after Jerome Powell signaled a pause next month. Plus, the Qatar Economic Forum kicks off in Doha, where we'll be speaking exclusively with global leaders in business and politics. In just a few moments, we hear from the CEO of TikTok. I'm Kriti Gupta in New York with Anna Edwards in London. Anna, a lot to digest, but perhaps the most news-making value happening in Doha this morning.
Yeah, absolutely. Plenty coming out there from the energy markets to aviation and beyond. So lots to talk about there from the geopolitical front as well. So some of those conversations, global conversations, filtering their way into the conversations in Doha. Let's get to what we're seeing here on European equity markets. Then we're down by 0.3% on the Stoxx 600 right now. Pretty broad-based across European equity markets, pulling back a little. Yes, we hear that the talks in the United States in Washington have been productive, and yes, President Biden reassures there'll be no default, but certainly the markets can't take that possibility for granted just yet. Julius Baer is down by 7.6%, a money manager, of course, wealth management business over in Switzerland. The expectation had been that they might do a little better from the collapse of Credit Suisse. They have not won big as a result of that, and so the stock down by 7.6%. The pound is at 123.93 on the back foot against the US dollar. That was the case earlier on this morning. Concern around the growth story, around the extent to which inflation stays sticky in the UK. We get inflation data out from the UK tomorrow. We're going to hear from a number of policymakers today. We've already heard a little bit from the Bank of England governor. There are still expectations that we will see further hikes here in the UK. So that's the Bank of England story right now. And we got PMI data, which certainly showed a lower than expected services PMI, Chrissy, but still pretty sticky on the services side. And Brent crude is pretty flat this morning, $76. But we put it in there because, of course, Chrissy, we were listening earlier on when the Saudi energy minister said, watch out to those speculating on oil markets. Those comments coming from the Qatar Economic Forum, where we are speaking exclusively to all of these guests. And he was saying this, of course, in the context of the surprise that energy markets got back in April when we saw OPEC Plus cut back on production.
Yeah, similar dynamic that you are seeing stateside as well, and at least in pre-market trading. I'll work from the bottom up as you were talking about that oil story. NYMEX crude kind of unchanged right now, a 72 handle, but it looks like it's trending marginally positively. So of course we're going to see if any of the news coming out of Doha kind of shifts the needle a little bit on the oil markets. But the souring sentiment, Anna, that you are seeing in Europe, 100% bleeding into the U.S. pre-market session. Futures kind of tilting a little bit downwards, down about 0.1%. Again, not a major move, no major momentum or conviction prediction just yet, but certainly something you're seeing being influenced by what you're seeing in Europe as well. The two-year yield is interesting because we were worried about it sustainably staying above that 4% level, and lo and behold, it is 4.36 on that two-year yield. A move already about 5 basis points to the upside, and that is a really big deal coming off the comments yesterday from James Bullard, a known hawk, and Neil Kashkari, also a known hawk. Bullard talking about 2 more rate hikes this year. That is counter to the consensus of essentially a pause, at least for the rest of the summer, something that Chairman Powell's comments were interpreted as saying. So something to keep in mind there. The Bloomberg Dollar Index in the meantime, Anna, perhaps following that yield story, higher by about 1/10% on that index.
Okay, lots to discuss then with Mike Bell, JP Morgan Asset Management Global Market Strategist, who joins me on set today. Mike, I'm torn between where to start. Do we start with the strength that we've seen in some stock markets? Do we start with the debt ceiling? Do we start with the higher yield environment? All these things no doubt linked in some way. I'm going to start with the strength that we've seen in stocks. We've talked a bit about the strength in the NASDAQ in recent sessions, and I wonder if you think that continues. I mean, let's put aside the debt conversation for just a moment and assume that goes away. That might be a big assumption, but assume it goes away. Is there more left in stocks?
I think, to be honest with you, there's huge uncertainty everywhere we look at the moment. If you look at the macro picture, on the one hand, you've got the business surveys that are picking up and telling you that everything's fine, recession risk's gone away. On the other hand, you've got the loan demand surveys from the bank lending surveys telling you that everything's really very bad and that we're just on the precipice of heading into a recession. And that's the case whether you look in the US or Europe. So the macro outlook's uncertain. And then what's even more uncertain in my mind is if you do get a recession, which I think is the base case, bond yields probably rally. So we see, I think, 10-year Treasury yields go down to something like 3%. But what does that do for stocks? Does it continue to support the NASDAQ? Obviously, we've seen since October bond yields down, stocks up, particularly growth stocks. Or do you revert to a more normal world where bond yields fall in a recessionary environment and stocks go down? So I think the outlook is just highly uncertain. And the way I view it is that you don't have to bet big on every hand you're dealt. I think when the outlook is uncertain, it makes sense to make smaller relative bets. Back in October, we were of the view that we were going to get a recession, but that was fully priced in, so we were bullish. Stocks have gone up a fair bit, so we're less bullish on stocks now than we were 6-7 months ago, but wouldn't want to be taking big underweight positions.
Okay, and taking that all on board and the fact you don't have to go overboard in every trade, what about the geographical distribution of that appetite, however limited, for stocks?
Yeah, I mean, what strikes me is that when you look at the different markets, Europe is the market that has most priced out recession risk. European stocks are pretty much back at highs, whereas back in October they were down 30%. So I think the market has got very excited about the pickup in the European PMIs, and obviously they came off a little bit this morning, but are still broadly telling you that the macro outlook is okay. But as I say, I look at those loan demand surveys and I look at some of the potential issues that you might get in commercial real estate, not just in the US, but in Europe too. And I think it's too early to say that Europe is out of the woods. Yes, the energy problem's gone away, but so if I was having to be cautious somewhere, I'd probably want to be cautious on Europe.
Okay, stay with us for a moment, Mike. Thank you very much for thoughts so far. Mike Bell, JP Morgan Asset Management, with us. Let us head back out to the Qatar Economic Forum in Doha, where Bloomberg's Caroline Hyde is in discussion with the CEO of TikTok.
The bill that was recently passed is simply unconstitutional. And as you pointed out, we very recently filed a lawsuit to challenge this in the courts, and we are confident that we will prevail. Separately, I've noticed that some of our creators have also filed a separate lawsuit challenging the same bill in the courts. And I do want to say that, they care because TikTok is really important to them. And this is the part of the story that I think is the most important part, of TikTok, which is that now that we have more than 150 million Americans on our platform on a very active basis, more than 1 billion around the world, people use TikTok as a place for expression. It's a very different experience, as you may know, from the other apps that are available in the market. This is one for discovery, for expression, for free expression. And a lot of our users use TikTok to find their communities, to discover, and to express themselves.
Yeah.
Moreover, there are 5 million small businesses in the United States that depend on TikTok, and millions more around the world, including here in this country and in the region. So I think, ultimately it is about providing value to these users and making sure that we continue to provide them with a great service that benefits them. And that's our key focus at this moment in time.
Expressing oneself, was that quite hard to express yourself most recently when you were in Congress, when you were having to try and tell your story of why TikTok is important to the United States?
I think it was a very important process, and I'm very grateful for the opportunity to show up and to tell our side of the story.
Could you tell your side of the story?
Throughout the 5 hours, I believe I had time to do that.
Yeah.
And I think it's a good opportunity for us to explain ourselves, because there are some myths and misconceptions about our company out there.
Dig into them, because the key issue that many would have is data and the concern, the anxiety that ultimately the Chinese government can have access to US user data. That is why Montana is wanting to ban TikTok. What do you wish you could have said to make that land, that isn't going to happen? Because it felt as though you didn't manage to prove that point.
Well, TikTok is not available in mainland China today. As we said many times, the Chinese government has actually never asked us for US user data, and we will not provide, even if asked. Now, beyond that, we have built, over the last 2 years, something we call internally Project Texas. And what it really is to ensure that American data is stored on American soil by an American company and overseen by American personnel. And this is truly an unprecedented project that none of the other companies in our industry have ever attempted. And we believe that we have taken steps that are above and beyond what our industry has done to protect the safety of US user data, which is very important.
Where are you with Project Texas? Because there's been some reporting, and I know that you've come out and said very soon Oracle will have the unprecedented access to our data, or indeed to the ways in which of your source code. But that's not now. When will Oracle be able to enact this sort of unprecedented overseeing and transparency of your company?
Project Texas is a very complicated project, and a lot of the elements of the project is already in place and operational. For example, today, by default, all US data is stored in the Oracle Cloud servers already, in the Oracle Cloud infrastructure, and no longer in our own servers in Virginia and in Singapore.
You've already done that transfer?
It's already done by default, correct. Separately, Oracle has begun the review of the code, although it's, as you can understand, a complicated project that will take time for us to finish the details. So it's on track. Oracle and ourselves are working together with the US government to finalize the details of Project Texas.
There's also, I believe, Project Clover in Europe, which is a similar idea. And what's so interesting is your industry is grappling with this issue at the moment. The fact that we're sort of almost getting a nationalization, a sovereignty argument for data. And we've just seen Meta, which I know the artist formerly known as Facebook, where you were once an intern, has just been issued a fine for keeping its data in Europe, or not, as the case may be. That's what's argued by the EU regulators. What do you make of this almost deglobalization that's occurring in technology?
I think this is a very important topic that you're touching on. Now, on the one hand, the internet is really built on this idea of global interoperability, and this idea that talent from around the world can connect very seamlessly with each other. And I think we've all seen the benefits of a very connected global internet over the last few decades. And I continue to be a big proponent of that. I think there's so many important elements of this global interoperability that needs to be preserved. Now, at the same time, there are conversations now in the EU, in the US, and in other countries around the world about what they call data sovereignty, making sure that there are certain elements of the data. Data is a very big term, so we need to make sure that we are very specific about what we are talking about. Certain elements of protected data, for example, are stored and handled in a particular way in each region. And that's something that I believe we are ahead of the curve, because Project Texas in the United States is really sort of a project that deals with digital sovereignty in the US. And because we have so much learning from that project, we started Project Clover, a very, very similar project for Europe, starting a few months ago now. And the idea is very similar. We are building our data centers in Ireland, in Norway, localizing the storage of data in Europe, building additional data access protocols, but adapted for GDPR, which is the regulation within the EU. And we believe that this is an important conversation, and we are slightly ahead of the curve. And I think that we need to simultaneously address the concerns about and the desire for digital sovereignty, while making sure that we don't break the internet, that we don't balkanize this, and we continue to enjoy the benefits of a seamlessly connected global internet.
Do you think that argument can land? And in particular, do you think there's a point at which you're going to be able to turn to US Congress or an EU regulator and say, without doubt, there will be no backdoor to any government, whether it be the Chinese government or whomever wants to have their data? Like one previous, employee of ByteDance is currently saying does exist, a backdoor does exist for the Chinese government.
I just want to address that particular person left the company in 2018. So a lot of what he said is baseless from our point of view. But to your question, I think data security is a never-ending project. Any company that comes to you and says, we are 100% safe from any threats, is probably underestimating the problem, because threats can exist externally and internally, domestic or foreign. This is true for any company that deals with data at some scale. So what we commit to is that we will take this extremely seriously, that we will continue to invest to make sure that our data is as safe as possible. But to ask any company to promise that this is 100% safe from all threats, I think this is not something that any company can reasonably promise. Project Clover and Project Texas, we believe, are unprecedented projects that we're putting in place that will allow the data to not only be stored locally, but to be managed by local employees, and to have third-party local companies to give that system its monitoring. And this is something that goes above and beyond that any company in our industry has pursued so far. So we're confident that this is a very robust solution.
And you're using technology to try and fix a perceived problem. Where could artificial intelligence be used for moderation as well as for content creation and new ways in which your creators can be producing video that much faster, for example?
The recent coverage on AI reminds me of this great quote that says something along the lines of, it took me 10 years to be an overnight success. So the industry has been developing and evolving for a very significant period of time. And we have incorporated some elements of machine learning, for example, in our recommendation algorithm. Our recommendation algorithm is just math. And in order to process all these numbers across so many users, we need to leverage machine learning. So it is at the core of the offering that we are giving to our users, and it's good. People discover a lot of joyful content because of our recommendation algorithm. Now, beyond that, some of the latest developments, particularly by OpenAI and the ChatGPT product, could be very profound for productivity. There are many elements like content moderation, or creation as a creation tool for many of our users on our platform that could be unlocked with this new technology. It's very exciting.
I just want to go to our audience because you have control within this conversation. You can partake in a poll, for example. I want to put to you a question currently that we're wondering as to whether artificial intelligence will change the way in which you use social media in all its forms. Yes, it will be vastly changing your relationship with social media. You'll be making avatars left, right, and center. Maybe you already think AI is within the world of social media and it's already being leveraged. Or do you not think it'll change at all? I'm going to give you a moment to get into your app, give me your answer. But to that point, your own AI, you mentioned OpenAI there. Will you ever build your own large language model at TikTok? Would it be beneficial?
I think it's a very interesting development in the industry. And of course, there are many companies that are leading in this. And we're still in the process of making sure that we understand and study this. So that's the stage that we are at this moment in time.
Okay, being debated. There's a lot of optimism and hope around artificial intelligence. There's also a lot of caution and concern. How do you regulate it? How do you look at ensuring that this doesn't make people out of work? Or indeed, how do we ensure that perhaps the AI effects that I can use within TikTok doesn't make everyone think that anyone can be beautiful, anyone can be glamorous? I'm thinking of one particularly famous AI filter that you have, Glamour Filter. You are, I know, a man who thinks a lot about ensuring safety on the product. You're a man of 2 children who are eventually their world is created around technology. How safe and secure and built for a healthy relationship with technology do you think TikTok is?
This is a very important question. I think not only for us, but for people that will come after us. The current progress of AI is truly very exciting. It's fascinating. And from everything that we have seen so far, it could really quite profoundly improve our productivity across many, many things. It's a great tool for us to make our daily lives and our daily work a lot better, including the creation of videos. TikTok is about inspiring creativity and bringing joy. And you can imagine, using some of these creation tools for people to express themselves in a better way than before. One part of our product vision is a canvas to create. We have a window to discover, a canvas to create, and bridges to share. Now, in the creation part, if we give people more tools, I think you can imagine a world where it's easier for people to express themselves. So that's very exciting. What you mentioned is, the risks. As with anything that's evolving so quickly, of course, we should invest to understand the risks. And I think for AI, because it's so broad and so dynamic at this moment in time, it is important that we understand what the technology can do. Otherwise, it's very hard to put guardrails on something we don't understand. So yes, I do agree that some form of thoughtful, careful regulation is necessary to make sure that we're building guardrails, but at the same time, not killing off the innovation on something that could be so exciting for all of us.
And people are excited. Look, particularly when it comes to AI within social media, they think it will change social media. 73% of those in the audience do think that. How often at the moment, as the CEO of TikTok that is owned by a Chinese company, are people asking you about regulation in China of AI vis-a-vis in the US or globally, in the Middle East, in Europe?
I think these are important questions. We are still studying them across the world that TikTok operates in. But it's still very early. I personally think that it could be a mixture of rules and transparency and disclosure. Because for something that's evolving so quickly, a lot of times it is, you put in some guardrails and it could be quickly outdated, because of the evolution of the technology. So asking companies to be very forthcoming with disclosure, to be very transparent about what they're building, could be a very good way for us to better understand where the industry is headed.
Transparency, disclosure, a lot of what you're advocating to make people feel comfortable with TikTok, whether it be in Europe or the US. Do you have a plan B if you're banned in any state or country?
Now, we believe that, for an app that serves so many people around the world, that is so deeply impactful, not only on expression, but on people's ability to connect. I hear so many stories. Right before my hearing, I got a very nice message from one of our creators. He's given me permission to talk about him. His name is Dylan Walker, and he told me that he lives with autism. And because of our platform, he has found his voice through music to connect with a community that he could not connect with before. And it's this kind of connections, this deeply impactful, positive impact that our product has on people, that gives me a lot of confidence that we can have very thoughtful conversations with regulators around the world. And I'm confident that we are here to stay, not only because of the investments that we're putting in to keep the platform safe, but because of the impact it's having on the users themselves.
You've got 2 kids. Do you think they will come on, and would you be happy with them to interact with technology in the way that we do now as a society?
I think it's very important for the next generation to be digitally savvy, because they are going to live in that world. So, I don't want to speak for all parents. I think it's very important that parents make their individual decisions with their children. But for me personally, I'm very comfortable with my children getting more involved with understanding technology at an early age.
And using a TikTok product from 13 onwards, do you think?
Yes, absolutely.
Ultimately, do you feel at the moment when it comes to the creator that you've become, 3.8 million followers that you have on TikTok and the like, are you able to express yourself there? Are you feeling any vulnerability there of your newfound fame?
Well, I think it's very fun to be able to express myself like that. And I've been playing around with, a lot more sophisticated video editing. By the way, every single video that I post is, that I go through the editing myself. It's very fun, and it's very. I think it gives me a sense of a stronger sense of community with our creators and our users. I do interact with them on the app as well. It's been fantastic. And I see you are on as well. So for those who are not following, please follow her.
Well, vice versa to you. I have slightly fewer followers than you, it must be said, but I do all the editing myself too. So it was great to have some time with you. It went far too fast. We really appreciate you being here.
Thank you very much.
Of TikTok, the CEO.
Thank
you very much indeed.
Thank you.
Bloomberg's Caroline Hyde there, speaking with the CEO of TikTok at the Qatar Economic Forum. Plenty in that conversation, ending there talking about his own social media influence. But starting here, Chrissy, really interesting, talking about his experience on Capitol Hill, regulation, where they're seeing pushback, of course, from some states in the United States and how that that dynamic is going. Also data protocols from Project Texas to Project Clover here in Europe. Lots to discuss there. Interesting, he pushes back against what he sees as balkanization of regulation. I suppose these are conversations we're going to have with lots of big tech businesses as you try and match big tech, global big tech, on top of the national regulatory environment.
Yeah, and it's interesting that we're talking about this in the context of TikTok specifically, because there is also that overlay of geopolitics when it comes to TikTok. But Anna, these are the same questions that you see when it comes to the likes of Facebook, Meta, Instagram, WhatsApp, you name it. That's all really important when it comes to essentially how you start to regulate not just TikTok specifically, but social media around the world and get everyone on the same page. So this is really important, again, when we talk about just what we're doing in terms of not just social media for our children and et cetera, but also when you talk about just how this is going to play into the market specifically. Remember, a lot of these social media companies have been driving the gains when you look at the stock market as well. I mean, Meta, for example, their gear of efficiency is a really big part of this year's stock market story.
Yeah, and interesting, they talked about AI. To what extent has that been as a theme driving resurgent interest in the NASDAQ and in tech stocks broadly? You mentioned earlier on in the program, Chrissy, that relationship we've seen between the NASDAQ rising despite the fact that we've got this higher yield environment, which in some periods has not been the case. We've got US stock futures pointing down, but not hugely so, still waiting for any movement in Washington.
Yeah, I mean, it comes down to the stalemate that you're seeing, but I wonder what the reaction is going to be. Let's say we do have a deal come through. Will it be something to celebrate, or does the narrative very quickly shift to the hawkish monetary policy we're hearing from the likes of James Bullard, Neil Kashkari, and I wonder who else will come to the forefront?
Yeah, absolutely. We've got the debt ceiling debate to nail down, but then, of course, there's the Fed conversation, which will carry on. Interesting that we didn't necessarily see so much pickup on some of those Fed lines over the last few days or so. Maybe they get more airtime once we're done talking about the debt ceiling. That is it for early edition. Surveillance is up ahead. There'll be plenty more, no doubt, coming from Doha. This is Bloomberg.
notice in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we're all part of an organization that's coming together that says if you've, we can put our camera feed together and tell that that person has been in our store, in their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades? I guess?
I will tell you, it started at razor blades because that's such a high ticket item, but, it's a lot of cosmetics, but really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe a counter. And so it's just a matter of categories now.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
This is Bloomberg.
It seems to be we're set for the Fed to pause in June, and I would expect that to be the case.
Our view is for economic deterioration. It's kind of a slow burn.
A certain amount of pricing power, part of inflation that will be, relatively sticky.
We still generally like non-US markets to the US because we still think the US is on the more expensive side.
We have the first cut penciled in for March of 2024, so we still have quite a ways to go before we get that first cut.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
We need special mood music for when they come out and say talks were good. Like better sounds. Do you know what I mean? Do you get that?
Yeah,
and then violins when it gets really bad and it's sad and it's dark.
I think the nation's sort of worn out by it. I think the nation is almost moved beyond.
You think?
Okay, let's get to June and get it fixed and move on.
Talks were productive. You ready to move on?
No, it's next week Tuesday. That's what I'm calling it right now, folks. That's what I'm beginning to see. I saw it last night about 8 p.m. I'm starting to see the language next week. All of a sudden, too, John, you mentioned this yesterday. Yeah, Janet Yellen's bringing it this way, but we're going that way. The calendar's moving, and I'm sorry, it's next week Tuesday.
For all the happy talk in Washington, D.C., Treasury Secretary Janet Yellen is doubling down on this early June warning. We'll catch up with Greg Valliere a little bit later this hour. I have to say, it's pretty scathing about this, Bramo. If the ex-date really is June 1, we're in trouble here.
Which is the reason why the mood talks aren't really helping when you take a look at some of the pricing, particularly on the short end of the yield curve. Some people might say, well, there are a whole host of other reasons. Maybe so. But still, it is clear that it is political dynamite for either side to allow the U.S. to default. At the same time, they're not getting closer to a resolution, but the deadline is drawing closer, so the chances for a technical default are rising.
We're going to start strong this hour with an expert on those dynamics at 3-month and 2-year and all that. But I think that the debate is sort of removed from what we see in the markets. This is now a political debate, and I'm sorry, I'm going to go to the immediacy of it. Something changed yesterday. You saw it in the meeting, and it's today, this Tuesday, it's next week Tuesday. That's all there is to it.
Yields climbing for 8 consecutive sessions. 8 now. Yields up again this morning at the front end, close to 440. Yeah. Last time we had a day when the 2-year yield was lower was all the way back on May 11th, I believe, and we were at about 390. Bramo. So we've had a big adjustment at the front end of the curve, encouraged by a Federal Reserve who just refuses to call this a pause. They just don't want to say it. Just don't call it a pause seems to be the approach from Fed officials.
And Jim Bullard took it one step further, where he said, not only do we not want to call it a pause, but we're going to raise rates 2 more times probably by the end of this year. There's a tension right now between a banking crisis that isn't and an economy that is, an economy that's really grinding forward. And at what point do people have to reset back to sort of a pre-March kind of reality and do that in the yield space as well?
Is Bank of America resetting on a bull market call?
4,300?
Yeah, that got a lot of play yesterday. And
They think there's some upside here, sure.
Sabrina was out there. I mean, it got a lot of play.
I think we're catching up with Savita a little bit later
I
this
hope
morning.
so.
Very cool.
Savita Subramanian, where was she, John? 35?
She was at
3,600?
4,000 for this year.
Okay, but this is a big deal.
This is up.
This, up, and they're doing it with rates going up. It's bizarre.
Live from New York City this morning. Good morning, good
We
morning.
haven't talked about the elephant in the room.
What's that?
She's, Bramo, I mean, Tom's in his office falling apart because Mr. Roy died, and Bramo's making a cameo on Succession.
Okay, stop there.
Yeah.
I told you yesterday, no spoilers.
I'm not.
All right, okay.
I'm not.
You done running the program?
No, she was just, she's like the star. Everybody was all over Twitter yesterday.
Bramo is the star of this
Bramo
show.
was the star
She's the
of
star of Succession. That's not a surprise to me. Okay?
Not the star of Succession. There was a tiny little picture in the far distance of B-roll that I was happening
Well,
to
it
be
meant
in.
a lot to me, Bramo, so
It
don't
meant a lot to
spoil
me
it.
too.
All right? Equity softer on the S&P 500, negative by about 0.2%. Take a look at the euro, the data out this morning. Manufacturing data in the Eurozone, terrible. Services just about okay. But the euro's breaking down. 107.77, just another retreat this morning, Lisa, a weaker euro.
And it's interesting that you point to the manufacturing side, huge disappointment. But on the other side, the services sector came out better than expected with increased pricing pressure. This is two sides of the wrong coin for a region that still faces a lot of inflation, but also potentially some sort of decline in what we're seeing. We're going to get that view in U.S. economic data in just one second. But today we do hear a host of different speakers from the Qatar Economic Forum. Ken Mullis will be on the show from Mullis & Company. Bill Winters will be joining us, Group CEO of Standard Chartered, and the CEO of Boeing, to be sort of interesting to see following on the Ryanair discussion we had yesterday. Then when it comes to the PMIs in the U.S., we get that around 9:45, around 10 a.m. We get, in other words, a sense of, do we see the same kind of bifurcation in the U.S. at a time when economic data has been surprising to the upside at the fastest pace going back about a year?
Are these PMIs the same as the early month PMIs? Aren't there like 4 flavors of PMIs?
You get S&P Global and you get ISM.
Okay.
Yeah.
Which one do you look at?
I think ISM in America has a longer history, and a lot of people pay a little bit more attention to that.
These are S&P, yeah.
Okay, great. Got that.
But everything counts.
Okay.
Everything's important. You really are trying to derail this program this morning,
just
aren't you?
PMIs. What's a PMI? I don't know.
Bramo, anything else?
Yeah, just Dallas Fed President Lori Logan at 9 a.m. Perhaps she'll give more of a sense. And happy birthday also to Henry Kissinger, who's speaking at the Economic Club of New York on his 100th birthday.
He's 100.
It's his 100th birthday today.
Wow, still going. Happy birthday.
He's focused on immigration and migrants. He's focused on the diaspora of America.
I mean, still going, still talking at these events, Bramo, not retiring, still active.
I know, that's impressive.
Oh, Lisa.
Right.
George Concalves joins us now, head of US macro strategy at MUFG. George, Speaker McCarthy says the tone was better. It was better. Does that bring you any comfort?
Look, actually, what's been really impressive about this whole debt ceiling discussion, considering that it took so long to get to where we are. I mean, there were 2 months gap, nothing being discussed, and all of a sudden now there's optimism. The tack is much different. I mean, in the prior debt ceiling sort of showdowns, you had like a much more acrimony going towards the last minute. This one feels like they're trying to create kumbaya towards an actual resolution. I hope that spirit is in the right place and that they actually get something that's done soon, because the time is ticking, as Tom pointed out. But I do think it obviously does help that they're being much more optimistic. But we got to see some actual details before the markets really believe it.
George, if this gets fixed, as many presume, what does the 3-month T-bill yield do?
So, like, the whole T-bill curve has a bunch of up and down type movements, which are really kind of sending mixed signals, but a lot of it in the very front end related to this debt ceiling debacle. At a minimum, we should get some normalization closer to like Fed funds, and I think that would create a much more smoother yield curve.
I look at the smoother yield curve we'll get, but then does it reset low? Are you modeling in a disinflation as so many others are?
Yeah, no, our view is like we really have 2 paths here, and one of it was a glimpse that the first sort of shock wave that we got in March, as well as this kind of lingering bank crisis and turmoil that we're in. If that path, if it continues to kind of exert credit tightness and a credit crunch really develops in the U.S. economy, then the Fed has to probably cut much more than what's priced in. On the other side, if it's purely just this immaculate disinflation that we're going to be heading down towards the Fed target over the course of the next 18 months, then it's a much more gradual easing path. But nonetheless, I mean, we're at a point where we're probably peaked rates, And the Fed, really has a challenge here because a body in motion stays in motion. But when the Fed stops tightening, if they actually do stop in June, which we think they will, it's harder to defend that position. Staying on hold is actually going to be probably harder.
The Fed themselves are basically saying, stop listening and expecting us to tell you what we're going to do at the next meeting. We're not there yet. We haven't gotten all of the data. And in the meantime, what we have seen is really a repudiation of the death of the dollar story in light of some of the debt ceiling debates. How long can that happen? The sense that the dollar will strengthen, even though there is concern about the U.S. defaulting on its obligations.
Look, I think that the default issue, as long as we don't have like a miscalculation towards the last minute, there's been, I think, enough sort of exploration around the idea that we should avoid default, even if it gets down to the wire. So I think that the dollar is really taking its cue from a more of a medium-term outlook, that the rest of the world is slowing, that the China reopening was not as strong of a reopening as people expected, and that Europe had really the benefit of the weather at the beginning of the year, and Germany's slowing down, one of the fourth largest economies in the world, not really growing. So I think that the dollar is both a view of both sides. The euro being a big part of the DXY. You're seeing dollar strength, and I get nervous about dollar strength, especially heading into the summer. We've seen many times in the past where the dollar strengthening, higher rates, it could still create a risk-off environment towards the end of the summer.
How much more could it strengthen, given the fact that we just saw this data that was really stagflationary out of the U.S., out of Europe, I should say. Perhaps we get something similar in the U.S. In just a couple of hours here. Do you think that you could see further dollar strengthening and perhaps the sense that the euro's gotten overplayed with a recovery in China that's kind of losing steam a little bit?
Yeah, I think that's spot on. I mean, that's the whole point. I think that we had this narrative at the beginning of the year that even with the Fed being done, you can still have a strong dollar. You don't have to see the, just be purely based on interest rate parity. This could be now, the dollar shortage story, the fact that it's still the reserve currency as much as people want to downplay it, and that there's a need for dollars to transact. So I think that plus, the overall economy weakening globally could give the dollar some strength here.
Euro dollar right now, just breaking down. Session lows, negative 0.3%. George, thanks for being with us, mate, as always. George Goncalves there of MUFG, breaking things down for you on both the Europe side, euro side of the trade, dollar side of the trade as well. Data in Europe just hasn't been great over the last couple of weeks. You see that in the surprise index. You can see that in the currency as well over the last few weeks or so.
Are they having a debate over sticky inflation? My perception is the inflation in Europe is so entrenched, they're not to a sticky debate. It's just plain and simple. High.
The ECB has got work to do.
Yeah,
and the
it's
ECB will tell
debate.
you that themselves. They want to go further.
Yeah, I mean, there was a couple days ago, Lagarde came out with a set of headlines, and it was like a completely separate thing from the debate in America. And to me, going into June, it's really too stark and different.
Yeah, the Federal Reserve a little bit further down the road. Yeah. I think most people would tell you, Tom. Just getting some numbers that feel a little bit Home Depot-y over at Lowe's. Full year comp sales, looking for that to come in at -2 to -4% over at Lowe's. They had seen -2 to flat. The estimate was -1.92. Just the range for EPS for the year ahead, $13.20 to $13.60. They had seen $13.60 to $14.
I'm going to go Jim Bianco on you here. He was talking about how retail sales are in inflation added sales. When you adjust for inflation, retail's not as good. And there's a headline from Lowe's competing with Home Depot. First quarter comps hurt by lumber deflation. Yeah, unfavorable weather, they all face that. But lumber deflation figures into the top line. And that's how you come in and you get a more challenging comp study.
Lisa, the stock is down by a little more than 3%.
I love the Home Depot-y is now an adjective somehow, and I plan to use that in my daily life quite frequently. Man, just stop it. Cut it out there, kid. That's Home Depot-y. No, but this is really the issue. Is this really just a home improvement story, or is this something broader? Is this just that people piled into their homes, brought them, upgraded them, and now they're flying around the world and going for experiences and neglecting their homes?
It's like the pull forward in demand that we saw in the tech sector.
There
we
you
saw
go.
in home improvement as well. Nice. Greg Valliere is going to join us shortly of AGF Investments on the debt ceiling. He's got some scathing words about just how much time is left here. He doesn't think there's much time at all. Yields a little bit higher by 2 or 3 basis points on a 10-year. Yields up again in the equity market. Futures a bit softer from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. On Capitol Hill, there's still no deal on the debt limit, but the two sides are sounding optimistic. President Biden and House Speaker Kevin McCarthy met at the White House Monday night. They called their talks productive and promised to keep negotiating. The president said both he and McCarthy have agreed that a default is, quote, off the table. Russia is presuming other countries, including India, is pressuring them behind the scenes. Now, the Kremlin is threatening to upend defense and energy deals unless they help block expected moves aimed at punishing Russia over its invasion of Ukraine. Documents seen by Bloomberg show Ukraine wants the Financial Action Task Force to add Moscow to its so-called blacklist or gray list. That would put Vladimir Putin's government in the same company as North Korea, Iran, and Myanmar. Turkish President Recep Tayyip Erdogan has won the support of nationalist rival, boosting his bid to extend his rule. The long-shot third candidate, Sinan Oğan, has asked his supporters to back Erdogan in Sunday's runoff. Oğan was eliminated from the first round of balloting, with just 5% of voters backing his candidacy. Erdogan led the earlier vote, but fell short of the 50% majority needed for an outright win. Walgreens has reached a tentative settlement with consumers who said the drugstore giant was, quote, willfully blind to fraud at blood testing startup Theranos. Consumers in Arizona and California had alleged Walgreens offered the company's blood tests at its stores, even while it had good reason to suspect Theranos' technology didn't really work. The founder of Theranos and its former president are both serving prison time for fraud. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Debt ceiling deadline closes
Back and forth on the debt ceiling debate.
Kevin McCarthy says it's going to be on the floor next week.
Keep it tuned to Bloomberg for up-to-the-minute reporting.
Movement from the White House walked out of this meeting saying the White House was being unreasonable.
And first-hand analysis from the political and business leaders who matter.
The debt ceiling is potentially catastrophic.
We will not pass a clean debt ceiling. They should just simply do their job.
Both political parties are guilty.
For continuing coverage of the debt ceiling standoff, keep it tuned to Bloomberg, your global business authority.
Both talked about the need for a bipartisan agreement. We have to be in a position where we can sell it to our constituencies. We're pretty well divided in the House, almost down the middle, and it's not any different in the Senate. And so we got to get something that can sell to both sides.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion.
Say the word productive a few more times, we might believe you. Plenty of happy talk from President Biden, the House Speaker. Kevin McCarthy. Let's get straight to the numbers. Treasury Secretary Janet Yellen issuing another warning to lawmakers. We estimate that it is highly likely that Treasury will no longer be able to satisfy all of the government's obligations if Congress has not acted to raise or suspend the debt limit by early June, and potentially as early as June 1. Greg Valliere of AGF Investment writing the following: if the ex-date really is June 1, we're in trouble, because there simply may not be enough time to write the deal into legislative language. Then give lawmakers time to actually read it. If the ex-date is around June 6th or 7th, there may be time to reach an agreement. TK, pretty scathing from Greg this morning.
Get out the calendar, and someone that's known the calendar of Washington for decades and decades, Mr. Valliere briefs us this morning here on May 23rd. I've been calling it next week Tuesday. Somewhere in the zeitgeist last night, Greg Valliere, I saw people talking about next week is suddenly upon us. Is it?
Yeah, we're getting there, Tom. I've been very negative, as you know, but I think that the caps, these spending caps, are really crucial. The Democrats have agreed to a spending freeze. That's a big deal. So I think we're not going to default. However, a big caveat, I don't think they can get it done in time. I think there's going to have to be an extension of a week or two, because there's a lot of members in both parties who need to be persuaded. But we're getting there. We're getting a little bit closer.
Which can kick down the road is best for Americans? Is it a shorter-term one where they fix this in 2 weeks, or do we want a can kick down the road into, say, September?
You really don't want to go into September, Tom. I think that's going to be annoying to the markets. The longer this thing sits out in the sun, the more it's going to attract flies. So I think that we've got to get something done, and I think it can be done, but there's going to probably have to be a short-term extension.
It's definitely already annoying to markets and far beyond. And it seems like there's been a shift in rhetoric away from jawboning the other side with fiery threats of a default to something of a nature reflecting the fact that nobody wants to have the U.S. default. Is this a political shift on both sides to basically say, look, we're not going to do this. We're not holding the U.S. hostage. We're just trying to negotiate in good faith?
Well, I think there's a growing feeling on Capitol Hill. This could be a pox on both your houses. If we don't get anything, I think the level of disgust toward Congress will increase if that's possible. So, no, I think both sides want to get this done. Both sides genuinely do not want to see a default. What is annoying to me is that at the very last minute, they brought up revenues. We're going to talk about taxes now? That seems to be an issue that just complicates things.
Let's talk about that, especially given the fact that tax receipts, tax income this year was so far below what the U.S. was expecting. Part of the reason why the ex-date perhaps is a bit earlier than other people had been projecting. Is this because of a lack of investment in the IRS? Is this because of loopholes? Is this because of tax code? Or simply because the economy isn't doing as well as people had previously thought?
Well, there are a lot of variables, Lisa. And I would say that the one that could snag this whole thing is a proposal to cut back dramatically on the IRS funding, as you mentioned. If they did that, that could drag this thing well into the summer. But I'd say they're there. They probably have at least half of the deal done. So the odds continue to improve slightly that we'll get a deal in a week or two.
What happened to all of the intransigent members of both parties? Basically, the ones on the right who have been saying we're not going to pass any kind of increase in the debt limit. We're going to mandate all sorts of cutting over our dead bodies. That was sort of the platform that they ran on. And then on the other side, people pushing back on Biden and saying, why are you even negotiating? You're giving in far too much and you're looking weak. How much are you seeing those two sides willing to come to the table and actually vote for a plan that is hashed out between McCarthy and Biden?
It's a really good point, and it's a big wild card right now that couldn't both parties hold their members. I think McCarthy's done a pretty good job at holding Republicans. I think a lot of Democrats don't want to be seen as contrasting with Joe Biden. So I'd say in both parties there's a resignation that they're going to have to get this done.
Greg, I want to segue here. I was thunderstruck in the early morning yesterday of the Telegraph of London having as its lead headline the op-ed from the Washington Post on elderly presidents, of course, led by President Biden, the study that the Washington Post did. What was the ramifications inside the Beltway of the Post study of many older presidents?
Well, I think a lot of people think this has been overdone, but we see overnight Hillary Clinton, who is late 70s, saying that, yes, I understand Joe Biden is real old and this could be a liability. You know, it's an issue that is not going to go away, but as I point out to people, Donald Trump has a birthday in about a month. He turns 77.
Greg, don't you think, though, this is just a way of avoiding the actual elephant in the room? It's not about age, it's about mental acuity. Why don't we actually have that discussion? Not all 70-year-olds are created equally. Not all 80-year-olds are created equally. In fact, I know some 90-year-olds who are as sharp as some of the 60-year-olds that I know. Greg, why aren't we having a proper conversation about this topic?
Well, you're right, and you guys mentioned a few minutes ago, Henry Kissinger turns 100 today, and he's still really sharp. So you're absolutely right, John. I think that's the big issue, but it's going to be a blunt object used against Joe Biden whenever he says something inarticulate, whenever he looks frail. It's an issue he's not going to be able to avoid.
Greg Valliere of AGF Investments. Greg, thank you. Appreciate it, sir. TK, I just think that people seem to be happy right now to have this conversation. 80, it's really old. I actually think that's quite offensive. Really, the conversation we should be having, is the sitting president fit enough to run for another term? Does he have the mental acuity to run for another term?
We have a distant history of that. Woodrow Wilson, Reagan failing, George Bush Sr. failing, many would say, as well. And my guess is as we get closer to the election, we'll shift. We'll shift from an age study to whoever the two candidates are.
Can he campaign? Look, Tom, back in the campaign, the previous campaign, and we've talked about this a million times, he didn't really have to campaign. In fact, the campaign strategy wasn't to. Yeah. That was the thing. Stay away, make this a referendum on the sitting president. The big test of this president is going to be whether he can actually go out there and campaign in a way that he did not in the previous election.
Lisa, do we observe it yet? I don't think we observe him campaigning yet, really.
We have observed him more public, though, and having more events and being more present.
And he made jokes about it at the White House dinner.
But this is the question, how do you maintain momentum? This is a grueling schedule for anyone, let alone, someone who is, more senior. And honestly, this is the issue, especially, I was thinking about this yesterday. He flew back from Asia, he flew back from Japan, and then had to restart negotiations. No wonder it was at 5:30 p.m. No wonder it wasn't at 8 a.m. in the morning, because how could anyone be functional at that point?
It's a lot of work. It's a lot of work, that's for sure. We'll pick up on this conversation, no doubt, again, maybe this morning, because Tom seems to like talking about it. You bring it up a lot.
Well, I think the Washington Post article yesterday was huge. Well, let me make clear, this was positioned as an opinion piece. It was an editorial. It was not like reporting. It was an editorial from the Washington Post. And again, they clearly made every effort not to make it just about President Biden. They had fancy charts of presidencies going back for decades and decades. But nevertheless, there it was. And I was thunderstruck. The Telegraph in London picked it up. Boom, right at the top of the masthead.
It's a big topic. It's a big topic. I just think that you need a little bit more detail than simply saying the president is age X. The issue here is whether you think he has the mental acuity or not.
Yeah.
And that's what's been coming up in the polls. That's the issue at play here. You can be a young 80-year-old. You can be a young 70-year-old. You can be a very old 60-year-old.
My dad beats me in tennis all the time.
There you go. How old's he now?
He's 80s.
He's crushing it,
yes.
Right? We need to go a little bit further. Liz Ann Saunders is going to join us shortly from Charles Schwab. Looking forward to that conversation. Equities, just a little softer here from New York. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
Equities on the S&P 500, a little lighter, softer, lower, negative by 0.1%. The real story, though, is in the NASDAQ, isn't it? What a run we've seen. March 10th, if you go back to March 10th, so that's a couple of days after SVP starts blowing up, the NASDAQ 100's up 17% since then. 17! Absolutely flying. And have a look in the bond market. Let's go through this together. Your 2-year. Your 2 years had what? 40, 50 basis point move? 50 basis point move over the last 7 days, and still climbing this morning, Tom, up another 7 basis points.
Yeah, you mentioned 4.40. I thought you were reaching for it. Boom. We're there. John, I mean, we got to explain this right now. We're going to take a couple minutes, folks. This is too critical to go to. If you
still doing a market check.
I don't care. If you beat John, if you beat Middlesbrough 1-0, and you go to Wembley,
yeah,
this is like, folks, this is a huge deal. And John lived this as a kid trying to make the sky blue, right?
Tried to. Didn't quite make it.
Many of us tried to.
Was a teenager. And
others talk about it. You tried to do it.
Went on trial. They were a Premier League club at the time. Some of my friends were there. They did make it, and they were fantastic football players. But the next level up, you can be the best player in your school, but be the best player at that kind of standard, and then be the best player after that. You've got to be supremely talented and incredibly dedicated too. And let's say I lack the dedication.
And they're going to have, I read John, they're going to have 40,000 tickets. They go into Wembley.
Yeah.
It's for the Championship League, and if they win, then they play Manchester City and the Tots in
it's
that
next year. It's a playoff to get into the Premier League, and you get serious money. Serious money.
Each player, or just the team?
I'm not sure what the bonus agreement is with each player, but certainly the team gets a serious pool of money to try and compete at the highest level. And then you've got a decision to make as a club. Do you chase the Premiership and not the title, just staying in the league by spending a lot of money to trying to do that?
Yeah.
Or do you try and do something a little bit more conservative? Because what you run the risk of doing is overspending, then dropping back down and struggling to get back up.
I loved this weekend. I watched 5 minutes of somebody playing the Bees, like Bournemouth or something. And it was this, not in America, folks. You see this. It was like a minor league ballpark. You know, it was a tiny band. Dorset, it was a team that I think came up last year. And you have this mega team of mega money playing in this little team with the fans right up against the front. That doesn't happen in America.
You should see what Highfield Road used to look like back in the day at Coventry City, which was the old stadium, and unfortunately got knocked down. But that was right in the middle of the housing estate, right in the middle. It was a very cool walk. I remember my first game there.
Have you ever done the thing where
Highfield Road to watch, I think, Manchester United Coventry.
But they're going to go into Wembley. I think it's this Friday, right? And it's like
this
70,000, 80,000 people.
If I knew we were going to have this conversation, I might have prepared for it.
Oh, no, we can't be prepared. You would have said we're not having this conversation. I just said, yeah, we're going to have this conversation because it's the Sky Blues.
Okay, thanks for that. You're a Sky Blues supporter now?
I am a Sky Blues supporter. Well, it's tough. I look at QPR and I'm like, I don't know, you know.
Are you done with your data check?
I wasn't done. Shall
Well,
I just
finish the
can I
data
fit
check
in the
here.
euro?
Before we go to Fran, finish the
Okay.
data check.
Thank you. Let's fit in the euro. I promised to talk about Coventry City a little bit later this week in the FX market. A euro, there we go. A breakdown, a session low.
Big breakdown.
TK 107.73, we're negative 0.4%.
Someone watching the Euro breakdown, of course, is Francine Lacroix from London, but now from Qatar, with her an important conversation on American and global finance at the Qatar Economic Forum. Francine Lacroix.
Thank you so much, Tom. I am absolutely delighted to be joined by Ken Moelis for a robust conversation on the economy. It's a little bit noisy. Everyone's having their coffee. I don't know whether there's a lot of noise on inflation or how your view, Ken, has changed on the U.S. economy in the past months.
Well, it's pretty much stayed the same. I think we're still fighting inflation. It's interesting to me because everybody's focused on the Federal Reserve. I was just talking to somebody about the last time we had inflation, there was a big debate called guns and butter. I don't know how many people remember that, but the United States was in the Vietnam War, and there was really a lot of choices to be made, and how inflationary a war environment is. And I do think people are underestimating how inflationary it is to conduct policy at home and fund the war. And I do think that the inflation's going to stay higher for longer. And I don't think the Fed's easing so quick.
So no cuts from the Fed is what you're expecting?
I expect the Fed might continue to be aggressive and at least higher for longer.
Are you expecting some kind of credit crunch?
Look, I think credit's tough out there. Cost of money's going up. It's hard to get credit. I think it's going to continue to be hard for a while. Yes, I don't know if it'll be a credit crunch, but it's difficult.
Ken, what do you worry most about in the markets right now?
I think probably just the continuation. I do think we need to find I think the continuation of the war is something in the background. It's just not front and center in the conversation. And what I was trying to point out is, it was interesting in the 70s when we had inflation, it was the topic. The interesting part to me is that no one's even discussing it as a fundamental driver of fiscal policy that results in inflation. And I think it's one of those things that needs to be, it's going to continue to drive inflation.
How much do we worry about the debt ceiling?
Not as much as everybody here wants to. I think it's a great news item, and I think it's like watching any great negotiation. Again, maybe my background as an M&A banker. Look, no deal gets done until everybody walks away from the table at least once. And so we're doing that in a global environment with a lot of media. But I do think sooner or later the debt ceiling will be yesterday's news.
Ken, when you look at some of the big pictures, it can be AI. Are your bankers using ChatGPT? How will that change the way that you invest?
Right now we're actually blocking ChatGPT just because you have to be careful about as you put information into the system, it actually becomes part of the system. So there's a lot that has to happen for us to get use out of it. But obviously ChatGPT and all AI is going to change a lot of things.
A lot of things or everything? Is it too soon to say how much it will change and at what pace?
Yeah, no, I think it'll be like all things in tech. I look back and I've been shocked every time at the curve and how quickly things get adopted and how much change happens. I suspect there'll be a significant amount of change from AI.
Ken, talk to me a little bit about SVB. So you've put in people, right, in your company from SVB. Are you expecting to do the same with Credit Suisse?
I thought you were asking me about SUVs for a second.
SVBs.
SVB.
It's so noisy.
Look, it's a wonderful. Just when things are difficult are the time when you have to make big moves in life.
Yeah.
And it's funny, the great opportunities don't come when you want them to. They come because something happened. So when SVB had their issue, we moved that weekend, and we saw their tech team as a spectacular opportunity for us, and we hired about 12 managing directors out of the group. Now, the M&A environment isn't perfect, but I don't think that would have become available in a perfect environment. So we're building for the next 5-10 years.
But so is that a space that you will grow, basically what SVB was doing? How big will it get?
Well, it doubled the size of our tech footprint. It fit like a glove. Really, there was almost no overlap. It was, we knew the people. We had literally tried to hire them before SVB did. And so we knew them. We knew they were our culture. We knew the overlap was perfect for us. Look, the tech fee pool is the biggest fee pool in the world right now, even for private equity. I think software alone might be the biggest fee pool. And out of those 12 MDs, I think 7 of them were on software. So we look forward to really, it doubles our footprint in the tech world.
Are you looking to hire anyone from Credit Suisse? Does it present similar opportunities? It's a big talent pool.
It's different, though. We did announce one hire in the industrial business from CS, and we are looking at that more as a one-off opportunity as people decide. But SVB was, for us, very unique in how deep they were, how organized they were. It was a team that understood each other, worked together for many years, so it was a really good opportunity to do something significant.
And can more than the crypto meltdowns, because that also, I imagine, bring hiring opportunities from some juniors.
Crypto, we've been big, we've been doing our restructuring group. We have one of the leading restructuring groups in the world, and we've been involved in almost all the crypto restructuring. But I don't know how much more there really is to go on that. I think there was a big wave post-FTX.
Yeah.
We have a group. We are dedicated to blockchain, and we cover it. But this tech team we took out of SVB was much more towards software and direct tech.
Given everything that we've talked about here at the conference and we've just talked about, how do you think your firm will change in the next 2 years? What will you focus on? What part of the business do you think will grow significantly?
Well, I believe this is a big spring almost waiting to uncoil. The M&A market's been in a recession. Everybody asks me, is the economy going to go into recession? I'll tell you, the M&A market's been in recession for about 14 or 15 months.
Yeah.
And the inventory of the transactions doesn't go bad. It doesn't spoil. It's not like, it doesn't go away. And I think when the Fed stops, when we have some clarity, and I don't know if that'll be a month, a quarter, 6 months, but when it comes back, the M&A market will come back strong. And we're just preparing for that. We think we're unlevered.
Yeah.
And we have a great opportunity to build the company in this downturn.
Ken, there's a lot of money in this region, and I know that there were, reports that you were involved with a possible takeover, Standard Chartered, of a Middle Eastern investor. Do you think that there will be more opportunities like that? Middle Eastern investors looking for, large, systemically important banks?
Well, I won't comment on any specific deal, but I will say, when you come here, and I encourage everybody who hasn't been, it's optimistic, it's energetic, it's pro-business, and the enthusiasm and optimism and desire to grow the region is really invigorating. And yes, I believe the region has a bright future and is almost on the opposite cycle of the West right now. They're looking forward.
It helps having deep pockets because of the energy complex.
Yeah,
Ken,
it does.
Thank you so much for joining us. That was, of course, Ken Moelis of Moelis & Company. With that, Tom and John and Lisa, I'm going to send it back to you in New York.
Francine Lacroix, thank you so much. There was an important discussion on the events of the moment with Mr. Moelis. Important to see. Then this comes John off Greenhill in Mizzou yesterday, and each of these firms is different. It's all about the people, and it's people to people, and someone like Chanali Bassick really keeps score of the manpower and who's moving here, who's moving there. But the Greenhill transaction yesterday was something after their collapse from 80 to, I'm going to say, $10 a share from 2010.
There's some consolidation, Tom, and I think we should be clear. Certain parts of the banking universe are doing okay right now. Net interest income, JP Morgan raising the outlook. Other parts not so good. Think corporate banking, M&A, TK. Beyond the M&A we have seen, that's been a soft patch for some of these banks.
Did Jamie Dimon talk succession yesterday? Did Bramwell get a video?
5-year plan.
5-year plan.
Isn't it usually 5 more years?
Although
5 more years.
This time he said 3.5.
I think he said the corporate team, the executive team had intensity. Still, they had intensity.
He's not stepping down.
We've got intensity around this table. Savita Subramanian with Bank of America in the next hour on her upgrade to her outlook, coming up shortly.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Qatar Airways is beefing up its presence across much of the world as it continues to recover from the COVID-19 pandemic. CEO Akbar Al-Baker spoke exclusively with Bloomberg's Manis Krani on the sidelines of the Qatar Economic Forum in Doha.
Now that we are ramping up, we are introducing new routes in Europe, in Africa, in Asia, and of course going back big time into China.
Al Becker says ticket prices will continue to be higher, and he said the airline will wait and see before ordering new planes. Ukraine cannot win the war against Russia. That today from Hungarian Prime Minister Viktor Orban, who spoke with Bloomberg editor-in-chief John Micklethwaite at the Qatar Economic Forum. Now, Orban said with NATO not ready to send troops, quote, there is no chance for poor Ukrainians to win this war. Hungary is blocking a further $540 million installment of European Union financial aid to Ukraine. It also opposes new sanctions against Russia. BlackRock favors private credit over public as the banking sector turmoil makes traditional lenders cautious. BlackRock strategists say that private credit could help fill a void left by banks pulling back on some lending and offer potentially attractive yields to investors. Private credit has been booming as lending conditions turn tight in the wake of Silicon Valley Bank's failure and Credit Suisse's shakeup. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
You're already seeing credit tighten up because, you know, the easiest way for a bank to retain capital is not to make the next loan. So I think you are going to see that. And I think everyone should be prepared for rates going higher from here. You know, that if 5% is not enough in Fed funds, and I've been advising this to clients and banks, you should be prepared for 6, 7.
Jamie Dimon, JP Morgan CEO, at the investor meeting yesterday with a lot of things to say about higher interest rates. I can tell you that Marko Kolanovic, the investment bank at JP Morgan,
I read that,
has a lot to say about risk aversion right now. They raised their cash allocation in their model portfolio by 2%, funded by reducing their weighting to equities and to corporate bonds. Listen to this shift in the commodities, rotating from energy, the reasons being recession risk and potentially a fading China growth impulse, to guess what, Tom? To gold. From energy to gold.
I saw that at the bottom.
In commodities. Interesting.
Yeah, saw that. And you're seeing that. Sarah Vellis at Deutsche Bank said the same thing.